What is common stock? Common stock is a share of ownership in a company that usually gives you voting rights on major corporate decisions. It lets you earn money if the stock price goes up or through dividends, though common shareholders are last in line if the company ever goes under. Which is better, debt avalanche or snowball? It really comes down to what keeps you motivated. The debt avalanche method saves you the most money by tackling high-interest loans first, while the debt snowball gives you quick psychological. What is automatic saving? Automatic saving is when you set up recurring transfers from your checking account straight into a savings or investment account on a regular schedule. It allows you to build up your funds consistently without even having to think about moving the money manually. What is a REIT? The REIT, or Real Estate Investment Trust, is a company that owns or operates income-generating properties like apartments, offices, or shopping centers. It allows you to invest in large-scale real estate and earn regular dividends without having to actually buy or manage physical property yourself. Emotion. What is mortgage amortization? Mortgage amortization is the process of what is thematic investing? Thematic investing is when you put your money. Why do investors sell covered calls? Investors usually sell covered calls to generate extra income from. What is real asset investing? Real asset investing means putting your money into physical, tangible items like real estate, commodities, or infrastructure, rather than purely financial assets like stocks. These investments are popular because they tend to hold intrinsic value and can protect your wealth during periods of. What is one financial rule everyone should know? A classic guideline everyone should know is the 50-30-20 rule, which suggests spending half your income on necessities, 30% on fun choices, and putting 20% straight into savings or debt repayment. It gives you a super simple framework to balance enjoying today. What is Coast Fire? Coast Fire is when you've already invested enough money that compound growth will fully cover your eventual retirement without adding another cent. Since your future is set, you only need to work enough to pay for your current day-to-day living costs. How does greed affect markets? Greed often drives investors to aggressively buy up assets, which can artificially inflate prices far beyond what companies are actually worth. This creates speculative bubbles that eventually pop when reality. What is net margin? Net margin shows the percentage of profit a business keeps from its total revenue after paying off all expenses, taxes, and costs. It basically measures how efficiently how are stock market indexes created. Stock market indexes are created by financial companies that select a specific group of stocks to represent a section of the market. They then use a what does Vega measure? Vega tracks how sensitive an options. What is market cap weighting? Market cap weighting means an What is fundamental weighting? Fundamental weighting is an index strategy where companies are sized based on actual business metrics like revenue, earnings, or dividends rather than their stock price. This helps avoid overallocating to stocks just because their market value recently surged. What is a trading strategy? A trading strategy is basically a set of rules. What is identity theft? Identity theft happens when someone steals your What is deposit insurance? Deposit insurance is a safety net, usually backed by Why do companies buy back shares? When a company buys back its own shares, it What is tax efficiency? Tax efficiency is all about structuring your investments so that you pay as little in taxes as legally possible. By using tax-advantaged accounts or assets that trigger fewer taxable events, you get to hold on to more of your hard-earned returns. What is options volume? Options volume simply counts the total number of contracts traded for a specific security during the trading day, showing how active the market is. Why do companies go bankrupt? Businesses usually end up in bankruptcy when their cash flow dries up and they can no longer pay off their debts or operating expenses. It often happens due to falling sales. What are private investments? Private investments are shares or stakes in companies that aren't publicly traded on a public stock exchange. They are typically available only to accredited or institutional investors. What is a short-term financial goal? A short-term financial goal is a money target you want to hit soon, usually within a year, like saving up for a fun vacation or building a small emergency fund. What is a 60/40 portfolio? A 60/40 portfolio is a classic investment mix, split between 60% stocks for growth and 40% bonds for stability. How do investors value a company? Investors figure out what a company is worth by looking at its financial health, future earnings potential, and comparing it to similar businesses in the market. When might a trader use a straddle? A trader uses a straddle when they expect a massive price move in either direction, but they aren't sure which way it will go. By buying both a call and a put option at the same strike price, they can profit as long as the stock makes a big enough leap. How do banks make money? Banks mainly profit by charging a higher interest rate on the loans they give out than the interest they pay to people keeping money in savings accounts. They also bring in extra cash through various service fees and account charges. What is a bank's provision for credit losses? A provision for credit losses is basically money a bank sets aside to cover loans that customers might not be able to pay back. It helps protect the bank from unexpected financial hits. What is total return? Total return measures the complete profitability of an investment by combining any cash distributions like dividends or interest with the overall change in its market price. What is inflation protection? Inflation protection involves strategies or assets, like Treasury inflation-protected securities, designed to keep your purchasing power from shrinking as prices rise over time. How can you avoid credit card interest? You can completely avoid paying credit card interest by paying off your statement balance in full every single month before the due date. What is residential real estate? Residential real estate consists of properties meant for people to live in, like single-family homes, townhouses, and apartment buildings. It is a super popular option for both home buyers and real estate investors. What is a mortgage REIT? A mortgage REIT is a special type of company that provides financing for real estate by buying mortgage-backed securities, earning money primarily from the interest on those loans rather than owning physical properties directly. What is a sector ETF? A sector ETF is a What is an options assignment? An options assignment happens when the holder of an option exercises their right, requiring the seller to fulfill the contract by buying or selling the underlying asset. How much money is enough to retire? Deciding how much money you need to retire really depends on your lifestyle goals. But a common guideline is having enough saved to cover about 80% of your annual pre-retirement income. What is a declaration date? A declaration date is the exact day a company's board of directors announces that a dividend will be paid out to shareholders, along with the details. What is ETF tracking error? ETF tracking error is simply the difference in performance between an exchange-traded fund and the underlying index it is designed to follow. A lower tracking error means the fund is doing a fantastic job mirroring its target benchmark. What is maximum drawdown? Maximum drawdown measures the biggest price drop an investment experiences from its peak to its lowest point before making a new high. It is a really helpful way to see how much risk or volatility you might have to weather during tough market periods. How can financial identity theft happen? Financial identity theft usually happens when scammers get a hold of your personal info like your social security number or credit card details to open unauthorized accounts in your name. What is a bank? A bank is a financial institution that lets you safely store your money, check your account balances, and borrow funds through loans. They are super helpful for managing your daily cash flow. What is the stock market? The stock market is essentially a giant global marketplace where shares of publicly traded companies are bought and sold every single day. It allows everyday people to become part owners of major businesses and potentially grow their wealth over time. How do interest rates affect housing? When interest rates go up, borrowing money for a home becomes more expensive, which usually cools down the housing market and slows rising prices. How do interest rates affect bonds? When interest rates go up, existing bond prices usually drop because newer bonds offer higher payouts. It is just one of those cool balancing acts in the fixed income world. Why is automatic saving effective? Setting up automatic savings takes the daily temptation away by moving your cash directly into a secure account before you even get a chance to spend it. Why does net worth matter? Your net worth is basically your financial health score because it looks at everything you own minus what you owe. Tracking it helps you see your overall progress toward big goals like buying a house or retiring comfortably. What is tax-deferred investing? Tax-deferred investing lets you put money into accounts like a traditional IRA or 401k before paying income taxes on it. This means your investments can grow faster over the years since you only pay taxes when you finally withdraw the funds in retirement. What are operating expenses? Operating expenses are simply the everyday costs a business has to pay to keep running smoothly, like rent, utilities, and office supplies. How does an inverse ETF work? An inverse ETF is designed to deliver the opposite daily performance of a specific market index by using derivatives like short positions and futures. They let people potentially profit when the market drops, though they are usually meant for short-term trading rather than long-term holding. What is a declaration date? A declaration date is simply the day a company's board of directors officially announces that a dividend will be paid out to shareholders. It is like the green light that lets everyone know cash rewards are on the way. What is a protective put? A protective put is an options strategy where you buy a put option to insure your stock against potential price drops. It acts like an insurance policy for your investments. What is a bear put spread? A bear put spread is an options strategy where you buy a put option at a higher strike price and sell another put option at a lower strike price to profit from a moderate price drop while keeping your upfront costs lower. What is a credit bureau? Credit Bureau is an agency that collects your financial and credit history to create a detailed credit report for lenders. They track things like your loan payments and credit card usage to help banks decide if you are a safe bet for a loan. How is total return calculated? Total return is calculated by taking all the cash distributions like dividends, adding any capital gains or losses, and dividing that total sum by your initial investment amount. How do you calculate savings rate? Your savings rate is figured out by taking the total amount of cash you put away each month, dividing that by your overall income, and multiplying by 100 to get a clear percentage. What is rental yield? Rental yield is a percentage that shows how much annual income a property generates compared to its total purchase price. It is a super helpful metric for landlords to see if their real estate investment is paying off. What makes a company difficult to compete against? A company gains a strong competitive edge by building a powerful economic moat, like having a unique brand loyalty or proprietary technology that others cannot easily copy. What is predatory lending? Predatory lending involves lenders using unfair, deceptive, or dishonest practices to trick borrowers into taking out loans with extremely high interest rates and hidden fees. It is a really unfortunate trap that can make escaping debt super difficult. What is real GDP? Real GDP measures the total economic output of a country adjusted for inflation, showing the actual growth in goods and services over time. What is core inflation? Core inflation measures the overall price increases of goods and services while deliberately leaving out volatile items like food and energy. By stripping out those unpredictable price swings, it gives economists a much clearer picture of underlying long-term economic trends. What does an investment bank do? An investment bank helps companies raise capital by underwriting new stocks and bonds, while also guiding big businesses through complex mergers and acquisitions. Can a great company be a bad investment? Definitely. Even the most amazing business can turn out to be a poor investment if you pay way too much for its shares. What is an international ETF? An international ETF is a basket of foreign stocks that lets you invest in companies all around the world through just one single trade. What does the Sharpe ratio measure? The Sharpe ratio measures the performance of an investment compared to a risk-free asset, adjusted for its overall volatility. Why does theta matter? Theta measures how much an option's price drops each day as it gets closer to expiration, which is super important for option sellers to understand. What is a valuation multiple? A valuation multiple is a metric like the P/E ratio that compares a company's stock price to its financial performance, helping us see if it is trading at a fair price. What is a crypto bear market? A crypto bear market happens when digital asset prices drop significantly and stay low for an extended period, usually driven by widespread pessimism. It can definitely feel gloomy, but many long-term believers use those phases to quietly accumulate more coins. What is price to book? The price-to-book ratio compares a company's current stock price to its net asset value per share, helping us see if the stock is undervalued or overvalued. Why are retail sales important? Retail sales track consumer spending habits, which give us a really good pulse on the overall strength of the economy. What is an NFT? An NFT, or non-fungible token, is a unique digital asset stored on a blockchain that represents ownership of a specific item like art or music. Because each token is entirely unique, it cannot be directly replaced by an identical item, unlike regular currency or cryptocurrencies. Is it better to pay off a mortgage early? Paying off a mortgage early saves you a ton on interest over the long run, but you could potentially earn higher returns by investing that spare cash elsewhere instead. What happens when you make extra loan payments? Making extra loan payments reduces the total principal balance faster, which lowers the overall interest you pay over time and helps you get out of debt sooner. What is GDP? GDP stands for Gross Domestic Product, which measures the total value of all finished goods and services produced within a country during a specific time frame. What makes a savings account attractive? A savings account is great because it keeps your cash safe while earning a little bit of interest on the side. Plus, you can usually withdraw your money whenever you need it without any hassle. What is forward PE? Forward PE takes a company's current share price and divides it by its expected future earnings per share over the coming year. It helps investors estimate how richly priced a stock is based on projected growth rather than past results. What is overdraft protection? Overdraft protection is a handy bank service that links your checking account to another account or a line of credit to prevent transactions from failing when your balance gets too low. It definitely saves you from those annoying returned payment fees. What is a vertical spread? A vertical spread is an options strategy where you simultaneously buy and sell options of the same type and expiration date, but at different strike prices. It helps limit both your potential risk and your maximum reward. What is a checking account? A checking account is a deposit account held at a financial institution that allows for quick withdrawals and deposits via debit cards or checks for your everyday purchases. What is revolving credit? Revolving credit is a type of open-ended loan like a credit card, where you can borrow up to a certain limit, pay it back over time, and then borrow again as needed. What is a stock option? A stock option is a contract that gives you the right to buy or sell shares at a set price within a specific time frame. It adds a really interesting layer of strategy to trading. What is a meme stock? A meme stock is a company whose shares surge rapidly in price, primarily due to intense social media hype and viral retail investor enthusiasm, rather than its underlying business fundamentals. What is tax efficiency? Tax efficiency is all about structuring your investments and withdrawals to minimize the amount of taxes you owe, helping you keep more of your hard-earned returns. What is a momentum stock? A momentum stock refers to a company whose share price is rapidly climbing on strong trading volume and heavy market interest, driven by the idea that trends tend to continue for a while. Investors often jump in to ride that wave of upward performance. What is tax efficiency? Tax efficiency involves carefully arranging your investments and withdrawals to reduce your overall tax burden, which lets you hold onto more of your investment gains. What is sector rotation? Sector rotation is an investment strategy where money is actively moved from one industry sector to another depending on the current phase of the economic cycle. It helps investors chase the best growth opportunities as market conditions shift. What are the risks of covered call ETFs? Covered call ETFs are great for earning extra income through options premiums, but they usually cap your potential capital gains if the underlying stock shoots way up. Plus, you still bear the risk of market downturns. How do banks make money? Banks mainly make money by charging a higher interest rate on loans they give out than the interest they pay people on their savings accounts. What risks does a Costner take? When you act as a Costner, you are legally promising to pay back the loan if the primary borrower stops making payments. This means your own credit score and financial standing are directly on the line. How is market capitalization calculated? Market capitalization is found by multiplying a company's total number of outstanding shares by its current share price. It is a quick way to see the overall size and value of a business in the market. Should young investors take more risk? Youth is definitely a great time to lean into higher risk investments since you have decades to recover from any market dips. Taking those calculated chances early on can really pay off in the long run. What is FOMO in investing? FOMO in investing happens when people rush to buy an asset simply because they see others making big profits, often leading them to buy right at the peak out of fear of missing out. What is a total market index? A total market index tracks a huge basket of stocks representing the entire stock market, giving you instant diversification in a single fund. What is diversification? Diversification is basically spreading your money across different investments, so you are not relying on just one company to do well. It is a fantastic way to lower your overall risk. What makes an ETF attractive for long-term investors? ETFs are fantastic for long-term holding because they bundle lots of different assets together, which gives you instant diversification with very low management fees. How can buybacks increase earnings per share? Stock buybacks reduce the total number of shares available in the open market, which naturally lifts the earnings per share, even if total net income stays the same. Why should private keys remain private? Your private keys act as the ultimate digital signature for your funds, meaning anyone who finds them gains full control over your assets. Keeping them completely secure is the only way to ensure nobody else can access or steal your crypto. How long do bear markets usually last? Bear markets usually last anywhere from a few months to a couple of years, though every downturn is a bit unique. Historically, they are much shorter than bull markets, so patience really pays off. What is short interest? Short interest is the total percentage of a company's shares that have been shorted by investors betting the price will drop. A really high percentage can sometimes signal upcoming volatility or even a potential squeeze. What is the consumer price index? The consumer price index measures the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services, serving as a primary gauge of inflation. How much does someone need for FIRE? The standard rule of thumb for FIRE is having about 25 times your expected annual living expenses saved up. That way, you can safely withdraw a small percentage each year to fund your lifestyle without running out of money. What is operating leverage? Operating leverage looks at how a company's fixed costs affect its profits when sales change. Businesses with high fixed costs can see their operating income shoot up dramatically once they clear their break-even point. Why is liquidity important? Liquidity is super important because it lets you quickly turn your investments into cash without losing value. It gives you the freedom to handle emergencies or jump on new opportunities right away. What is a fund's assets under management? Assets under management basically refers to the total market value of all the investments a fund handles for its clients. It is a great way to measure how big and popular a financial institution or portfolio actually is. What is a crypto bear market? A crypto bear market happens when digital asset prices drop significantly and stay down for a prolonged period, usually accompanied by widespread pessimism. It is a tough phase, but it definitely helps weed out weaker projects. What is a small cap stock? Small cap stocks are shares of smaller companies with a lower total market value. They can offer awesome growth potential, though they sometimes come with a bit more volatility. How does budgeting improve financial health? Budgeting gives you total clarity over where your money goes every month, making it way easier to save for goals and dodge unnecessary debt. It is seriously the best foundation for building long-term financial wellness. What is a centralized exchange? A centralized exchange is a platform managed by a specific company that helps people buy and sell cryptocurrencies easily. It acts as a trusted middleman to match buyers with sellers, kind of like a traditional stock market. Why is EPS important? Earnings per share is a fantastic metric because it shows how much profit a company generates for each share of its stock. Investors love looking at it to gauge a business's true profitability and financial health. How can you double your money? Doubling your money usually depends on time and the rate of return you earn through investing. People often use the rule of 72 to estimate how many years it will take by dividing 72 by your expected annual growth rate. What is a sector ETF? A sector ETF is a basket of securities that tracks all the companies within a specific industry, like technology or healthcare. It is a handy way to get instant diversification without needing to buy individual shares for every single business. How does inflation affect personal finances? Inflation reduces your purchasing power over time, meaning each dollar buys you fewer goods and services than before. It is definitely a good reason to invest so your savings can grow faster than rising prices. What is Ethereum? Ethereum is a decentralized blockchain platform that lets developers build smart contracts and decentralized applications. Its native coin, Ether, is used to pay for transaction fees on the network. What is execution risk? Execution risk is the danger that a trade might not get filled at the exact price you wanted due to market movement or delays. It is definitely something to keep in mind when placing large orders. What is an ETF expense ratio? An ETF expense ratio is the annual fee that funds charge shareholders to cover management and operating costs. It is usually shown as a small percentage of your total investment, so lower ratios help you keep more of your returns. What is operating leverage? Operating leverage measures how a company's fixed costs impact its operating income as sales volume shifts. Firms with high fixed costs can see massive profit jumps when sales increase. Why is deposit insurance important? Deposit insurance is super important because it protects your hard-earned cash in case a bank happens to fail. It gives you total peace of mind knowing your money is safe up to the legal limit. What is operating profit? Operating profit is the money a business brings in from its regular operations after covering necessary expenses like wages and materials. It gives us a really clear picture of how healthy the core business is. What is a crypto wallet? A crypto wallet is a digital tool that securely stores your private keys and lets you send or receive digital currencies like Bitcoin and Ether. What is a debt-free lifestyle? Living debt-free means you completely avoid carrying any loans or credit balances, so every dollar you earn stays entirely yours to save or spend. Can yield curve inversions predict recessions? When the yield curve inverts, it means short-term bonds pay higher interest than long-term ones, which has historically been a reliable warning sign for an upcoming economic downturn. It is definitely one of those market signals that economists watch very closely. What is a total market index? A total market index tracks a huge bundle of stocks to represent the entire stock market's overall performance. It is a super easy way to diversify your portfolio all at once. What is angel investing? Angel investing is when high net worth individuals provide capital to early stage startups in exchange for equity ownership. It is a super exciting way to help new businesses get off the ground while taking on a bit of extra risk. What is one financial rule everyone should know? The 50-30-20 rule is a classic guideline where 50% of your income goes to needs, 30% to wants, and 20% to savings. Why is yield chasing dangerous? Chasing high yields can lead folks into super risky investments just for a quick payout. It often means ignoring hidden dangers that could wipe out those extra gains. How do mortgage rates affect home prices? When mortgage rates drop, buyers can afford bigger loans, which usually drives home prices higher because demand increases. On the flip side, higher rates tend to cool down the housing market since monthly payments get much pricier. What are refinancing costs? Refinancing costs are the fees you pay to replace your current mortgage with a new one, which usually include appraisal and application charges. What is delta hedging? Delta hedging is an options strategy where traders neutralize directional price risk by buying or selling the underlying asset in proportion to the options delta. It helps keep the overall position balanced as the market moves. What is options flow? Options flow refers to tracking large institutional trades in the options market to see where big money is placing bets. It is a cool way to spot potential market trends early. What percentage of income should go toward housing? As a general rule of thumb, keeping your housing expenses around 30% of your gross income helps leave enough room for your other bills and savings. What is panic selling? Panic selling happens when investors get scared by market drops and hastily sell off their shares to prevent further losses, often locking in a downturn right before things recover. What is a trading edge? A trading edge is basically a distinct strategy or advantage that gives you a better statistical chance of winning trades over the long run. It helps traders stay profitable even when individual trades do not go as planned. What makes a savings account attractive? High interest rates make a savings account super appealing because your money grows much faster just by sitting there. Plus, knowing your cash is safe gives you total peace of mind. the advantages of REITs? Real estate investment trusts let you invest in big property portfolios without needing to buy a whole building yourself. Plus, they usually pay out awesome dividends to shareholders. What causes credit expansion? Credit expansion happens when banks increase their lending activity, which pumps more money into the overall economy. This usually occurs when interest rates are lower and businesses feel confident about borrowing. How does fear affect markets? Fear can cause sudden market sell-offs as panic takes over and investors rush to protect their money. It often leads to sharp price drops, even when the underlying businesses are doing just fine. What happens during an economic expansion? During an economic expansion, businesses grow, job opportunities increase, and overall financial activity picks up speed across the board. What is factor-based ETF investing? Factor-based ETF funds target specific attributes like value or momentum to potentially beat the broader market. It is a neat way to build a more tailored portfolio. What is an IPO valuation? An IPO valuation is simply the total estimated worth of a company determined by investment bankers right before it goes public and lists its shares on the exchange. What is a stock split? A stock split happens when a company divides its existing shares into multiple new ones to make them more affordable for everyday buyers. It doesn't change the total value of your investment, just the number of shares you hold. What is an amortization schedule? An amortization schedule is a handy table showing every single payment you make on a loan, breaking it down into exact portions that go toward principal and interest over time. What is standard deviation? Standard deviation measures how much a set of values typically varies from the overall average. In finance, it is a handy way to check the volatility and risk level of an investment. What is industrial real estate? Industrial real estate refers to properties used for manufacturing, production, logistics, and warehousing. These buildings are essential for keeping supply chains moving smoothly. What is options flow? Options flow tracks large institutional trades in the options market to give us clues about where big investors think stock prices are heading. It is super fascinating to watch the big money moves unfold. What is a growth stock? A growth stock is shares in a company expected to expand its revenue and earnings at a faster pace than the rest of the market. These businesses usually reinvest their profits back into their operations rather than paying out large cash dividends. Why is free cash flow important? Free cash flow is super important because it shows the actual cash a company generates after covering its operating expenses and capital expenditures. It is the money available for paying dividends, reducing debt, or fueling new growth. What is an ex-dividend date? The ex-dividend date is the cutoff day that determines whether you are eligible to receive the upcoming dividend payout from a company. If you buy the stock on or after this date, the previous owner gets the cash reward instead. What is black swan risk? Black swan risk refers to those completely unexpected, extremely rare events that catch everyone off guard and trigger massive market shocks. Since they are impossible to predict, investors usually manage this by keeping their portfolios well diversified. Why is compound interest powerful? Compound interest works wonders because it lets you earn returns not just on your original savings, but also on the accumulated interest from previous periods. It is basically a snowball effect that helps your wealth grow much faster over time. What is a Roth IRA? A Roth IRA is a special retirement account where you contribute money you have already paid taxes on, allowing your investments to grow completely tax-free and letting you withdraw your earnings without paying taxes later in life. What is a crypto exchange? A crypto exchange is a digital marketplace where you can easily buy, sell, and trade different digital currencies like Bitcoin and Ethereum using traditional money or other crypto assets. What is a vertical spread? A vertical spread involves trading options at the exact same expiration date, but with different strike prices to limit both potential risk and reward. What is net worth? Your net worth is simply the total value of everything you own minus all of your debts and liabilities. It is a great snapshot of your overall financial health. How is market capitalization calculated? Market capitalization is figured out simply by multiplying a company's total number of outstanding shares by its current share price. It gives us a great idea of how big a company actually is. Is it better to pay debt or invest? Tackling high-interest debt first is usually a smart move because the interest you save is a guaranteed win, whereas investing offers returns that are never guaranteed. Finding that sweet spot depends on your personal comfort level and interest rates. What is bankruptcy? Bankruptcy is a legal process for individuals or businesses that are unable to repay their outstanding debts, offering a structured way to eliminate or restructure what they owe. What does beta measure? Beta is a metric that compares a stock's price movements to the overall market, helping us see how volatile an investment tends to be. What is a margin call? A margin call happens when your broker demands extra funds, because the value of the securities you bought with borrowed money has dropped below a specific safety threshold. What is a variable rate mortgage? A variable rate mortgage is a home loan where the interest rate can change periodically based on overall market conditions, meaning your monthly payments might go up or down over time. What is fund concentration? Fund concentration happens when a portfolio puts a massive chunk of its money into just a few specific assets or sectors rather than spreading it out. While it can lead to bigger gains if those few picks do exceptionally well, it also ramps up your overall risk significantly. Should investors hold cash during a market crash? Holding some cash during a market crash can be really smart because it gives you the flexibility to buy great assets at a discount. Plus, it helps protect you from needing to sell investments when prices are temporarily down. How long do bull markets usually last? Bull markets can vary quite a bit in duration, sometimes lasting anywhere from a few months to several years. It all depends on economic conditions and overall investor confidence. What is a mutual fund? A mutual fund pools money from a bunch of different investors to purchase a diversified mix of stocks, bonds, or other assets. It is a super convenient way to spread out your risk without having to pick every single security yourself. What is leverage in real estate? Leverage in real estate simply means using borrowed money, like a mortgage, to buy a property so you can control a larger asset with a smaller amount of your own cash. What is real estate appreciation? Real estate appreciation is simply the increase in a property's value over time. It usually happens because of market demand, improvements you make, or neighborhood development. Why should investors avoid emotional decisions? Making financial choices based on feelings often leads to buying high out of excitement or selling low out of panic. Sticking to a solid strategy helps you stay calm and focused on your long-term goals. What is the biggest investing mistake? The biggest trap people fall into is letting emotions drive their trades, like panic selling when the market dips. Sticking to a well-thought-out plan keeps you grounded and on track. Why would someone buy a put? Buying a put option gives someone the right to sell a stock at a set price, which acts like insurance if they expect the market to drop. It is a handy way to limit potential losses. What is a stock buyback? A stock buyback happens when a company purchases its own shares back from the open market to decrease the total supply. This often boosts the value of the remaining shares and shows management has confidence in the business. What is an index? An index is basically a portfolio that tracks a specific group of market securities, like the S&P 500, to measure how that segment is performing. How does insolvency work? Insolvency happens when an individual or company can no longer pay their financial debts as they come due. It usually leads to restructuring debt or going through bankruptcy proceedings to figure things out. What is an IRA? An IRA is a special personal savings account with tax perks designed to help you build up funds for your retirement years. How are ETF distributions generated? ETF distributions come from the dividends paid by the underlying stocks or the interest earned from bonds held within the fund. The fund then passes those earnings right along to us as investors. What is gross margin? Gross margin shows how much profit a company makes after covering the direct costs of producing its goods. It is calculated by taking total revenue minus the cost of goods sold, divided by revenue. What is amortization? Amortization is just the process of spreading out a loan payment into smaller, equal installments over time. Each payment covers both the interest owed and a portion of the principal balance. What is cash flow from real estate? Real estate cash flow is the net money left over each month after paying all your property expenses like mortgage, taxes, and maintenance from the rental income. What does a central bank do? A central bank manages a country's currency and money supply, and it sets monetary policy to keep inflation in check. They also act as a lender of last resort for commercial banks during tough times. What is a calendar spread? A calendar spread involves trading two options on the exact same underlying asset, but with different expiration dates. It lets traders profit from how the time value decays differently between the two contracts. What is identity theft? Identity theft occurs when someone illegally obtains your personal information, like your social security number, to commit fraud or financial crimes in your name. What is a stop-loss order? A stop-loss order is an instruction given to a broker to automatically sell a security when it hits a specific price point, helping you limit potential losses. Why do central banks raise interest rates? Central banks increase borrowing costs primarily to slow down spending and cool off rising inflation. Making loans more expensive helps keep the overall economy stable. What is unsecured debt? Unsecured debt is a type of loan that isn't backed by any collateral, meaning the lender doesn't have a specific asset to seize if you miss payments, like with credit cards or personal loans. How does short selling work? Short selling is when you borrow shares to sell them immediately, hoping the price drops so you can buy them back cheaper later. It is definitely a risky strategy, but fascinating to watch play out. Should retirees own stocks? Yes, many retirees keep. What is pricing power? Pricing power happens when a company can easily raise its product prices without losing customers to competitors, usually because their brand is so strong or unique. What does FIRE stand for? FIRE stands for Financial Independence, Retire Early. It is a lifestyle movement focused on extreme saving and investing, so people can leave the traditional workforce decades ahead of schedule. What is retail sales? Retail sales measure all the money spent on goods and services at stores, giving us a really good look at how much people are shopping and supporting the economy. What does option delta measure? Option delta measures how much an option's price is expected to change when the underlying stock moves by $1. It is a super helpful metric for understanding your risk exposure. Why is EPS important? Earnings per share is super important because it shows how much profit a company generates for each share of its stock, giving us a clear picture of its profitability. Is Bitcoin digital gold? Bitcoin is often called digital gold because people use it as a store of value and a hedge against inflation, similar to physical precious metals. Its fixed supply cap makes it feel scarce and valuable to long-term holders. What causes a short squeeze? A short squeeze happens when a heavily shorted stock suddenly spikes in price, forcing bearish traders to rush and buy shares to cover their losses, which drives the price up even faster. What is economic expansion? Economic expansion is a period when the overall economy grows, marked by rising employment, increased production, and higher consumer spending. What is coast fire? Coast fire is a neat approach where you save enough early on so that your investments will naturally grow into a full retirement fund by traditional retirement age without you needing to save another cent. What is an IRA? An IRA is a special tax-advantaged account designed to help you save and invest for your retirement years. Why does theta matter? Theta measures how fast an option's price decays over time, which is super helpful to know if you are holding contracts as expiration approaches. What is an actively managed fund? An actively managed fund has a professional portfolio manager who picks and chooses specific investments to try and beat the overall market returns. Why do lenders care about debt-to-income ratio? Lenders check your debt-to-income ratio to see how much of your monthly income already goes toward paying off debts, which helps them figure out if you can safely handle a new loan. Why is automatic saving effective? Setting up automatic transfers is wonderful because it removes the temptation to spend that money elsewhere by putting your savings into action before you even see it. What is a HELOC? A HELOC lets you borrow money using the equity you've built up in your home as collateral, kind of like a flexible credit line. What is drawdown? Drawdown is the peak-to-trough decline in the value of an investment portfolio before it recovers to a new high, showing you the maximum pain or loss experienced during a specific period. What is revenue growth? Revenue growth tracks the percentage increase in a company's total sales over a specific period, which shows how fast its business is expanding. It is a key metric for spotting companies that are successfully scaling up. Which assets tend to perform poorly during inflation? During periods of high inflation, cash savings and traditional fixed income bonds usually struggle because their fixed payouts lose real purchasing power over time. How does bankruptcy affect credit? Bankruptcy stays on your credit report for several years, which makes getting approved for new loans or credit cards much tougher and usually leads to higher interest rates. What is an at-the-money option? An at-the-money option happens when the strike price of the contract matches the exact current market price of the underlying asset. Should you invest while paying off debt? It is usually best to tackle high-interest debt first, while making sure to still grab any matching employer retirement funds. What is mortgage insurance? Mortgage insurance is a special policy you have to pay for if your down payment is less than 20%, and it protects the lender just in case you cannot make your loan payments. Why does the early portion of a mortgage have more interest? At the start of a loan, your monthly payment is calculated based on the large remaining balance, so a bigger chunk goes toward interest before the principal starts shrinking down the road. What is gamma? Gamma measures how fast an option's delta changes when the stock price moves, which helps traders see how unstable their position might be. What does financial freedom mean? Financial freedom means having enough passive income or savings to cover your living expenses without needing to work a traditional job, giving you total control over your time. What is fundamental weighting? Fundamental weighting is an index strategy where companies are ranked based on economic measures like sales or dividends rather than their market size. What defines a market correction? A market correction happens when a major stock index drops by 10% or more from its recent peak, which is just a normal way the market cools off after growing fast. What is a money market fund? A money market fund is a very low-risk mutual fund that invests in short-term, high-quality debt to help keep your cash safe while earning a little bit of interest. What is a good net worth for your age? Net worth varies so much depending on your career stage and background, so it is best to focus on your own personal progress rather than comparing yourself to others. What is a cash flow statement? A cash flow statement is a financial report that shows how much money is coming in and going out of a business over a specific period. What is intrinsic value? Intrinsic value is the actual calculated worth of an asset based on its fundamentals, which might be totally different from its current market price. What is the FIRE movement? The FIRE movement stands for financial independence, retire early, which is all about saving aggressively and living frugally to leave the traditional workforce decades ahead of schedule. What is inflation? Inflation is the general increase in prices over time, which slowly reduces the purchasing power of your hard-earned money. What is a stop limit order? A stop limit order combines features of both stop and limit orders, meaning it triggers a specific trade only when a stock reaches your set stop price, but it will only execute within your specified limit price range. How is GDP calculated? Gross domestic product is calculated by adding up total consumer spending, business investments, government purchases, and net exports. What is unsecured debt? Unsecured debt is a loan that doesn't require any collateral, meaning the lender doesn't have a direct claim on your property if you happen to miss payments. What is the stock market? The stock market is essentially a giant global marketplace where people buy and sell shares of publicly traded companies, connecting everyday investors with growing businesses. What is execution risk? Execution risk happens when a trader cannot complete a buy or sell order at the exact price they want due to sudden market shifts or low trading volume. How can banks fail? Banks usually fail when too many customers withdraw their money at the same time, or when the bank's investments lose so much value that it can no longer cover its financial obligations. What is an international ETF? An international ETF is a single fund that holds a basket of stocks from companies outside your home country, making it super easy to diversify globally. Which is safer for online purchases, credit or debit? Credit cards generally offer much better fraud protection since your personal bank account isn't directly touched if something goes wrong. Plus, they usually have zero liability policies for unauthorized charges. What is the opportunity cost of spending money? Opportunity cost is basically the value of the next best option you give up whenever you choose to spend your money on something else. How much should you spend on housing? A good rule of thumb is to keep your housing costs around 30% or less of your gross monthly income. This helps ensure you still have plenty left over for savings, food, and other bills. What is options volume? Options volume simply measures the total number of contracts that have been traded for a specific security during the current trading day, showing how active the market is for that asset. What is a crypto airdrop? A crypto airdrop is when a blockchain project sends free tokens directly to users' digital wallets to help promote a new coin or reward loyal community members. Why is payment history important? Payment history is super important because it makes up the biggest chunk of your credit score, showing lenders whether you reliably pay your bills on time. What is downside risk? Downside risk is basically an estimate of how much money an investment could potentially lose if things take a turn for the worse. It helps us figure out the worst case scenario before diving in. What is an out of the money option? An out-of-the-money option is a contract that currently has no intrinsic value, meaning it wouldn't make sense to exercise it right now based on the current market price. Should you keep all your money in cash? Keeping all your cash at home, or just in a checking account, isn't ideal because inflation will slowly eat away at its purchasing power over time. It's usually smarter to put your savings into things that can grow or at least earn some interest. What is mortgage amortization? Mortgage amortization is the schedule showing how your monthly payments are split over time, gradually paying off both the principal loan amount and the accumulated interest. Why can options create large gains? Options can deliver huge returns because they use leverage, letting you control a large block of shares for a fraction of the stock's actual price. Just keep in mind that high leverage works both ways and can also magnify losses quickly. What is options flow? Options flow is like watching the live tape of large institutional trades, which helps us see where the big players are placing their bets in the market. How long do bear markets usually last? Bear markets can vary quite a bit, but historically they tend to last anywhere from several months to a little over a year on average. Every market cycle is different though, so it really depends on broader economic conditions. What does owning a stock mean? Purchasing a share actually gives you a tiny piece of ownership in that specific corporation, making you a shareholder. How does an inverse ETF work? An inverse ETF uses short selling and derivatives to move in the exact opposite direction of a target index, letting traders profit when the market falls. What is a strangle? A strangle is an option strategy where you buy both a call and a put with different strike prices, hoping to profit from a massive price swing in either direction. What is amortization? Amortization is basically the process of spreading out a loan into fixed regular payments over time. So you slowly chip away at both the principal and the interest. How can investors simplify their portfolios? Investors can easily streamline things by using broad market index funds or exchange-traded funds to get instant diversification with just one purchase. It is a super convenient way to manage your investments without needing to track dozens of individual companies. How does money supply affect the economy? When the money supply expands, it pumps more liquidity into the system, which can drive up economic activity but might also trigger higher inflation if it outpaces actual production. What are non-durable goods? Non-durable goods are items that get used up quickly or have a short lifespan, like fresh groceries, clothing, and paper products. What is preferred stock? Preferred stock is a unique type of equity that usually grants fixed dividends and higher claim on assets than common stock, though it typically lacks voting rights. What is a stop limit order? A stop limit order lets you set a specific stop price to trigger a sale and a limit price to cap the execution, giving you more precise control over your trade execution price. Why would a company perform a reverse split? Companies sometimes do a reverse split to boost their per share price, so they can stay compliant with major stock exchange listing rules. What investments can hedge against inflation? Assets like real estate, commodities, and treasury inflation-protected securities are fantastic choices for protecting your portfolio from inflation. What is a soft landing? A soft landing happens when a central bank successfully brings down high inflation by raising interest rates without accidentally tipping the whole economy into a recession. Why should investors take advantage of an employer match? An employer match is basically free money for your retirement savings account. Missing out on it means leaving extra compensation on the table, so it is always smart to contribute enough to grab the full amount. Which is beta measure. Beta is a metric that compares a stock's price volatility to the broader market, showing how much it usually swings up and down. Can someone save 50% of their income? Saving half of your income is definitely an ambitious goal that requires careful planning and cutting back on non-essential expenses, but it is totally doable with the right lifestyle choices. Why should you check your credit report? Checking your credit report regularly helps you spot any errors or signs of identity theft early on. It is a great way to keep your financial health on track. What is fiscal policy? Fiscal policy involves a government using its tax revenue and spending habits to influence the overall direction of the economy. What is dollar cost averaging? Dollar cost averaging is an investment strategy where you regularly put a fixed amount of money into an asset regardless of its price, which helps smooth out market bumps over time. What causes deflation? Deflation usually happens when technological advancements make production cheaper, or when there is a significant drop in overall consumer demand across the economy. What is dividend growth? Dividend growth is when a company consistently increases the cash payout it gives to its shareholders over time, which is usually a great sign of financial health. How does credit card interest compound? Credit card interest usually compounds on a daily basis if you carry a balance past your payment due date. That means the interest from the previous day gets added to your total balance, so you end up paying interest on top of interest. What is a trailing stop? A trailing stop is an order that automatically follows your stock's price upward, locking in profits by selling if the price drops by a set percentage from its peak. What is dilution? Dilution happens when a company issues new shares of stock, which decreases the ownership percentage of existing shareholders. It usually means your slice of the pie gets a bit smaller. What is a short-term financial goal? A short-term financial goal is a money target you want to hit soon, usually within a year, like saving up for a fun weekend trip or building a starter emergency fund. What does the S&P 500 represent? The S&P 500 is a stock market index that tracks 500 of the largest publicly traded companies in the United States. It is often used as a great gauge of the overall health of the stock market. What defines a market correction? A market correction happens when major stock indices drop by 10% or more from their recent highs. It is totally normal and actually gives investors a chance to buy solid companies at a discount. What is rental yield? Rental yield is a percentage that shows how much annual income a property generates compared to how much it costs to buy. It is a handy way for real estate investors to figure out if a rental home is actually making a good profit. What is a bank's net interest margin? A bank's net interest margin is the difference between the interest income it earns from loans and the interest it pays out to depositors. It is a key metric that shows how profitable the bank's core lending activities really are. What causes deflation? Deflation is generally triggered by a major surge in overall economic productivity or a sharp contraction in consumer spending across the board. How does Bitcoin work? Bitcoin runs on a decentralized digital ledger called a blockchain, which uses cryptography to keep all transactions secure and transparent without needing a bank. People known as miners solve complex math puzzles to verify these transactions and earn brand new coins as a reward. What is a bank's provision for credit losses? A provision for credit losses is money a bank sets aside to cover loans that borrowers might not be able to pay back. It acts like a financial safety net to protect the bank's stability. Why does net worth matter? Your net worth gives you a clear snapshot of your overall financial health by comparing what you own against what you owe. It is a fantastic benchmark to track your long-term progress toward financial freedom. What is gross rental income? Gross rental income is the total amount of money a property brings in from rent before you subtract any expenses like maintenance or taxes. It gives you a great starting point for seeing a property's earnings potential. How can you protect your financial accounts? You can keep your account safe by using strong, unique passwords and turning on two-factor authentication for an extra layer of security. Always watch out for sketchy phishing links, too. Why should you review bank statements? Going over your bank statements regularly helps you spot any sneaky unauthorized charges and keeps your spending habits right on track. How can you lower your monthly expenses? You can easily trim your monthly spending by cutting out unused subscription services, planning your weekly grocery trips in advance, and cooking meals at home more often. Even small changes like finding cheaper utility providers add up to big savings over time. What is a GIC? A guaranteed investment certificate is a secure financial product where you deposit your money for a set period at a guaranteed interest rate. It is a super safe way to grow your savings without risking your principal. What is the biggest investing mistake people make? One major pitfall is letting emotions drive decisions and selling panicked during a market dip. Sticking to a long-term plan really helps avoid that trap. Where should an emergency fund be stored? An emergency fund should be kept in a liquid, easily accessible place like a high-yield savings account where it is safe from market risk. What is a fund's assets under management? Assets under management refer to the total market value of all the financial investments that a fund oversees on behalf of its investors. It is basically a great indicator of how large and popular the fund is. Why is ROIC important? Return on invested capital is super important because it shows how efficiently a company uses its money to generate profitable returns. It really helps us see which businesses are great at turning their investments into actual cash flow. What is a fixed-rate mortgage? A fixed-rate mortgage is a home loan where your interest rate stays exactly the same for the entire life of the loan. This means your monthly principal and interest payments will never change, which makes planning your long-term housing costs super predictable. What is an IPO? An initial public offering happens when a private company decides to sell shares to the public for the very first time. It is a huge milestone that lets everyday people buy a piece of the business. What is amortization? Amortization is just the process of spreading out your loan payments into smaller, equal parts over time. Part of each payment goes toward the money you borrowed, and the rest covers the interest. What is return on assets? Return on assets is a fantastic metric that measures how effectively a company utilizes everything it owns to turn a profit. It basically tells us how well management is using their resources to generate earnings. Why is free cash flow important? Free cash flow is vital because it reveals the actual cash a business has left over after paying all its operating expenses and capital expenditures. This money can be used for dividends, paying down debt, or funding new growth opportunities. Why do expense ratios matter? Expense ratios matter because they directly reduce your investment returns over time by covering the fund's operational costs. Choosing lower fees means more of your hard-earned money stays invested and working for you. What is a straddle? A straddle is an option strategy where you buy both a call and a put option with the same strike price and expiration date. It lets you profit if the stock price makes a massive move in either direction, no matter which way it goes. What is time value? Time value represents the idea that money available right now is worth more than the exact same amount down the road because of its potential to earn interest. It is a foundational concept in finance. What is a secured credit card? A secured credit card requires a cash deposit up front that usually acts as your credit limit, making it a great tool for building or repairing your credit history safely. What is dividend investing? Dividend investing is a strategy where you buy shares of companies that regularly pay out a portion of their earnings to shareholders. It is a wonderful way to generate a steady stream of passive income while you grow your portfolio. Can someone save 50% of their income? Saving half of your earnings is definitely ambitious, but it is totally doable if you carefully audit your living costs and cut back on non-essential spending. Creating a strict tracking system helps make that big savings goal much more realistic. What is Bitcoin? Bitcoin is a digital currency that uses cryptography to secure transactions and operates without any central bank or government authority. It relies on a decentralized public ledger called a blockchain to keep track of every transfer safely. What are the risks of covered calls? Covered calls are generally pretty safe since you own the underlying shares. But the main risk is missing out on huge gains if the stock skyrockets past your strike price. Plus, if the market crashes, holding the stock still leaves you exposed to downside losses. What is a DRIP? A DRIP, or dividend reinvestment plan, lets you automatically use your cash dividends to buy more shares of that same company without paying extra fees. It is a super easy way to compound your wealth over time. Can credit card companies lower interest rates? Card issuers can certainly lower your annual percentage rate if you simply call and ask, especially if you have a solid payment history. Maintaining a spotless track record gives you great leverage to negotiate better terms. What is FOMO in investing? FOMO, or the fear of missing out, happens when you jump into buying a surging asset just because everyone else is doing it. That emotional impulse often leads to poor timing and buying right before a market correction. What is a crypto wallet? A crypto wallet is a digital tool that securely stores your public and private keys, allowing you to send, receive, and manage your digital currencies safely. What is fiscal policy? Fiscal policy refers to how a government uses its spending powers and tax rates to influence the direction of the overall economy. Adjusting these levers helps lawmakers manage economic growth, control inflation, and support employment levels during different cycles. Why do companies go public? Companies usually decide to go public to raise massive amounts of capital so they can fund major expansion projects, pay off debt, or reward early investors. It also gives their brand way more visibility in the market. What is thematic investing? Thematic investing is when you put your money into specific trends or industries changing the world, like clean energy or artificial intelligence, instead of focusing on a single company. What is a margin call? A margin call happens when your broker demands that you deposit more cash or securities into your account because the value of your leveraged investments has dropped below a required minimum level. What is a gamma squeeze? A gamma squeeze happens when a massive buying frenzy of call options forces market makers to purchase the underlying stock rapidly to cover their positions, pushing the price up even faster. Why does asset allocation matter? Asset allocation is super important because spreading your money across different types of investments helps lower your overall risk while still giving you room to grow. Why would a company perform a reverse split? A reverse stock split decreases the total number of shares while increasing each share's price proportionally. Companies usually do this to boost their per share price so they can meet a stock exchange's minimum trading requirements and avoid getting delisted. What is monetary policy? Monetary policy involves a central bank managing the money supply and interest rates to keep the economy stable and control inflation. Adjusting these financial levers helps guide employment levels and economic growth. What happens when collateral is repossessed? When collateral is repossessed, a lender seizes the asset you used to secure a loan because payments fell behind. They usually sell that property to recover whatever money is still owed on the debt. What is diversification? Diversification is just a fancy way of saying you should not put all your eggs in one basket. Spreading your cash across various industries helps protect your portfolio if one particular sector takes a hit. Why do companies buy back shares? Companies often buy back their own shares to reduce the total number available in the market, which can help increase the value of each remaining share. It is a great way for them to return extra cash to their investors. What is industrial real estate? Industrial real estate refers to properties used for manufacturing, production, warehousing, and logistics operations. These spaces are super vital for keeping supply chains moving smoothly and supporting global trade. What is a trailing stop? A trailing stop is an order that automatically follows the market price of your investment at a set distance, locking in profits if the price goes up, while protecting you if it suddenly drops. What is the difference between credit and debit? Using a debit card means you are spending money you already have in your bank account, while a credit card is basically taking out a short-term loan that you have to pay back later. What is a value stock? A value stock is a company trading below what it is actually worth based on its finances, offering investors a bargain opportunity. What is services PMI? The services PMI is an economic indicator that tracks the business activity levels of the service sector, including industries like healthcare and hospitality. A reading above 50 signals economic expansion, while anything below points to a contraction. Why are penny stocks risky? Penny stocks are super risky because they are thinly traded, meaning it is really hard to sell them quickly without losing money. Plus, they often face less regulatory oversight, which opens the door to potential price manipulation. What is discounted cash flow analysis? Discounted cash flow analysis is a method used to estimate the value of an investment based on its expected future cash earnings. It essentially calculates what those future funds are worth in today's dollars. Is lump sum investing better than dollar cost averaging? Lump sum investing puts all your money to work right away, which historically captures higher average market returns over time. On the other hand, dollar cost averaging spreads your purchases out, helping to smooth out the bumps if the market gets choppy. What does gamma measure? Gamma measures how fast an option's delta changes when the underlying stock price moves. It is basically the speedometer for your option's sensitivity. How does a line of credit work? A line of credit gives you flexible access to a set amount of money that you can borrow, repay, and borrow again as needed. You only pay interest on the specific portion of funds you actually use. What investments can hedge against inflation? Assets like real estate, commodities, and treasury inflation-protected securities are popular choices because they tend to hold their purchasing power when prices rise. What is accounts payable? Accounts payable represents the short-term debts a business owes to its suppliers for goods or services purchased on credit. It shows up as a liability on the balance sheet until the company actually pays off those bills. What is a credit bureau? A credit bureau is an agency that gathers your financial history and payment habits to compile a credit report, which lenders use to score your creditworthiness. What is gross margin in business? Gross margin is the money a company keeps after subtracting the direct costs associated with producing its goods or services. It shows how efficiently a business handles its core production expenses. What is delinquency? Delinquency happens when a borrower misses a scheduled payment on a debt obligation, like a loan or credit card. It is basically the first warning sign before an account goes into formal default. What is a rainy day fund? A rainy day fund is money you set aside specifically for unexpected expenses, like sudden car repairs or medical bills. It really helps give you peace of mind. What is cash flow from real estate? Cash flow from real estate is the leftover money you get after paying all your operating expenses and mortgage from the rental income you collect. What is manufacturing PMI? The manufacturing PMI is an economic index that tracks the health of the factory sector based on new orders, production, and employment levels. When it sits above 50, it usually means the industry is expanding. How is GDP calculated? GDP is calculated by adding up all consumer spending, business investments, government purchases, and net exports. It basically measures the total value of all finished goods and services produced within a country during a specific period. What is dividend reinvestment? Dividend reinvestment means taking the cash payouts you receive from your shares and automatically buying more stock instead of cashing them out. It is a fantastic way to compound your holdings over time. What is maintenance margin? Maintenance margin is the bare minimum amount of equity you must keep in your brokerage account after buying securities on margin. If your account value drops below that specific threshold, your broker will issue a margin call asking you to deposit more funds. Why do banks pay interest on deposits? Banks pay interest on deposits because they use that pooled money to fund loans for other customers. It is basically a way to reward you for keeping your savings with them. What is delinquency? Delinquency simply occurs when a borrower fails to make a required payment on time. It acts as an early alert before an account falls into serious default. What defines a market correction? A market correction happens when a major index drops by 10% or more from its recent peak. It is totally normal for the market to take a breather every now and then. How does a stock exchange work? A stock exchange operates like a giant digital marketplace where buyers and sellers trade shares of public companies. It matches orders quickly to ensure fair pricing and smooth transactions every trading day. Is Bitcoin digital gold? Bitcoin is often compared to digital gold because people view it as a potential store of value with a limited supply. However, it tends to be much more volatile than physical precious metals. Is gold a good investment? Gold has historically been viewed as a safe haven asset to protect wealth during uncertain economic times. It does not generate regular income like stocks or bonds, but many people like holding it to diversify their portfolios. Why are retail sales important? Retail sales are super important because consumer spending drives a massive chunk of our overall economic activity. When people are out shopping, it shows businesses and policymakers that the economy is healthy and growing. What is a bank's provision for credit losses? A provision for credit losses is money a bank sets aside to cover loans that borrowers might not be able to pay back. It helps protect the institution if people run into financial trouble. What is an earnings straddle? An earnings straddle is an option strategy where you buy both a call and a put option for the same stock with identical strike prices and expiration dates. Traders use this approach when they expect a massive price swing after an earnings report, but they are not sure which direction the stock will move. What is a business model? A business model is basically the core strategy a company uses to make money and stay profitable. It outlines how they deliver value to customers and what their main revenue streams are. What is dividend coverage? Dividend coverage checks if a company earns enough net income to comfortably pay its shareholder payouts. A higher ratio means the payout is safer and less likely to be cut. Why can profitable companies run out of cash? Even if a company makes a profit on paper, it can still run out of cash if customers take too long to pay their bills, or if too much money gets tied up in unsold inventory. Cash flow timing is everything in business. What is economics? Economics is the study of how society chooses to allocate scarce resources to produce and distribute goods and services. It helps us understand how individuals, businesses, and governments make choices. What causes economic growth? Economic growth happens when a country increases the production of goods and services over time, usually driven by innovation, workforce expansion, and smart investments. Can a great company be a bad investment? Definitely. Even the most incredible business can turn out to be a poor investment if you pay too much for its shares initially. What is a credit score? A credit score is a three-digit number that tells lenders how reliably you manage borrowed money. It is based on your credit history and helps determine your loan approval chances and interest rates. Why do central banks lower interest rates? Central banks cut rates to make borrowing cheaper, which encourages businesses and consumers to spend and invest more, helping to boost a slowing economy. What is economic overheating? Economic overheating happens when an economy grows way too fast, leading to high inflation and labor shortages because demand outpaces supply. What is black swan risk? Black swan risk refers to those completely unexpected, extremely rare events that catch everyone off guard and send massive shockwaves through the financial markets. What is gross margin? Gross margin shows the percentage of revenue left over after subtracting the direct costs of producing your goods, which is super helpful for seeing core profitability. Why do longer loans cost more? Longer loans accrue more interest over time because you are borrowing the money for a greater duration, which adds significantly to the total cost. What is a straddle? A straddle is an option strategy where you buy both a call and a put option at the same strike price, hoping for a massive price move in either direction. What causes economic growth? Economic growth is driven by things like new technology, a skilled workforce, and smart investments that help businesses produce more goods and services. What is a bank deposit? A bank deposit is simply the money you put into your bank account for safekeeping, which you can then withdraw or use whenever you need it. What causes market crashes? Market crashes usually happen when asset prices drop suddenly due to widespread panic, economic shocks, or when bubbles burst after getting way too inflated. When does refinancing make sense? Refinancing is usually a great move when current interest rates drop lower than what you are currently paying, allowing you to lower your monthly payments or pay off your loan faster. Why should private keys remain private? Keeping private keys secret is crucial because anyone who has them gains full control over your digital assets and wallet funds. How does fear affect markets? Fear causes investors to panic sell their assets, which often triggers sharp market downturns as everyone rushes to exit at the same time. What is total return? Total return measures the complete financial gain or loss of an investment, combining any income from dividends or interest with the overall change in its market value. What is real estate appreciation? Real estate appreciation means a property's market value increases as time goes on. This often happens because of growing demand in the area, neighborhood improvements, or general economic trends like inflation. What is a closed-end fund? A closed-end fund pools money from investors to buy a fixed portfolio of assets and issues a set number of shares that trade on an exchange. Why are financial statements important? Financial statements give us a clear look into a company's health, showing us its revenues, expenses, and overall profitability. They are super helpful for making smart investment choices. What is a growth stock? A growth stock is a share in a company that is expected to grow at an above-average rate compared to the rest of the market. These businesses usually reinvest their earnings to expand rapidly rather than paying out large dividends. How do bank overdraft fees work? An overdraft fee is a charge from your bank when you spend more money than you actually have in your account. It basically covers the transaction for you, but usually comes with a pretty steep penalty. What is momentum investing? Momentum investing is a strategy where traders buy assets that have been showing an upward price trend, betting that they will keep climbing for a while longer. What is a smart contract? A smart contract is a digital agreement stored on a blockchain that automatically executes actions when preset conditions are met. What is a leveraged buyout? A leveraged buyout happens when a company is acquired using a huge amount of borrowed money, using the target company's own assets as collateral to secure the loan. What is customer lifetime value? Customer lifetime value estimates the total revenue a business can expect from a single customer throughout their entire relationship. It helps companies figure out how much they should spend on keeping people happy and loyal. Why do central banks lower interest rates? Central banks lower interest rates to make borrowing cheaper, which encourages people and businesses to spend and invest more money to stimulate a slowing economy. What is a bank run? A bank run happens when a huge crowd of depositors rushes to withdraw their money all at once because they are worried the bank is about to run out of cash. What is a leveraged buyout? A leveraged buyout occurs when an acquiring firm purchases another company using a massive amount of borrowed cash, using the target's own assets as collateral to back the debt. What does PMI indicate? PMI stands for Purchasing Managers Index. and it is a handy indicator that shows the economic health of the manufacturing and services sectors. When it is above 50, it generally means things are expanding, which is super helpful for gauging overall business activity. What is a private key? A private key is a super secure cryptographic code that lets you access and manage your digital assets on a blockchain, kind like a secret digital signature. What is proof of work? Proof of work is a consensus mechanism used by blockchains to validate transactions and secure the network by having computers solve complex mathematical puzzles. Why should you review bank statements? Checking your bank statements regularly helps you spot any unauthorized charges and keeps you fully aware of where your money is going. Why do banks pay interest on deposits? Banks pay interest on deposits because they use that money to fund loans and investments, sharing a portion of those earnings right back with you. What is nominal GDP? Nominal GDP measures the total monetary value of all finished goods and services produced within a country, calculated using current market prices without adjusting for inflation. What is the difference between saving and investing? Saving is stashing your cash safely away in a bank for short-term goals, while investing puts your money to work in assets like stocks to help it grow over the long run. What is an income statement? An income statement is a financial report that shows a company's revenues and expenses over a specific period, letting you see if it's turning a profit. What are private investments? Private investments involve putting money into privately held companies or assets that aren't traded on public stock exchanges. They can offer great growth potential, though they usually require a higher minimum commitment and lock up your funds for longer. Should you use an emergency fund to pay debt? It is usually best to keep your emergency fund separate so you have a safety net for sudden surprises, rather than draining it to pay off debt all at once. What is a bond ETF? A bond ETF is a fund that holds a whole bunch of different bonds and trades on an exchange just like a regular stock. It is a super convenient way to add fixed income assets to your portfolio without needing to buy individual bonds yourself. How is dividend yield calculated? To find a stock's dividend yield, you just divide the total annual dividend payouts per share by the current market price per share, then express that number as a percentage. It basically tells you how much cash return you get every year for every dollar you have invested. Why is paying yourself first important? Paying yourself first means setting aside money for your savings and investments the moment you get paid, before you spend a dime on anything else. It is a fantastic habit because it guarantees you are prioritizing your future goals and building wealth consistently. How can you improve your debt-to-income ratio? You can boost your debt-to-income ratio by either paying down your current balances or finding ways to increase your overall monthly earnings. What is initial margin? Initial margin is the minimum amount of cash or collateral you need to deposit with your broker before you can borrow funds to buy securities on margin. What is a trading strategy? A trading strategy is basically your game plan for buying and selling assets based on specific rules, timelines, and risk limits. It helps keep your emotions in check while you work toward your financial goals. What happens after missed payments? When you miss payments, lenders usually charge a late fee and report the delay to credit bureaus, which can lower your credit score over time. If it keeps happening, your account might get sent to collections. What are the risks of REITs? Real estate investment trusts can be sensitive to interest rate changes and local property market downturns. Plus, some of them carry higher leverage, which can add extra volatility to your returns. What is financial risk? Financial risk is simply the chance that you could lose money on an investment, or that your actual returns will end up lower than what you were expecting. How does interest rate affect loan payments? When interest rates go up, the cost of borrowing increases, which usually means your monthly loan payments will be higher too. On the flip side, lower rates make borrowing cheaper and reduce your monthly bills. Why should you track your expenses? Tracking your expenses lets you see exactly where your hard-earned cash is going every month. It makes spotting unnecessary spending super easy, so you can reach your savings goals faster. Why do longer loans cost more? Longer loans cost more because interest gets added to your balance over a much greater number of months, which really adds up over time. Plus, lenders view extended timelines as riskier, so they often charge higher rates too. What is exercise? Exercise is any physical activity that helps keep your body healthy, strong, and energized. It is super important for staying active and feeling great. Baking a delicious banana pie takes a bit of patience, especially when waiting for it to cool and set properly. It is definitely one of my absolute favorite sweet treats to make. What is crowdfunding? Crowdfunding is a way to raise money for a project or business by getting small contributions from a large group of people online. It is super popular for bringing creative ideas and startups to life. What triggers a margin call? A margin call happens when the value of your borrowed investments drops below a certain required minimum level, forcing you to deposit extra funds or sell assets immediately. What is a pension? A pension is a retirement plan where your employer puts money aside for you regularly, so you get a steady income after you stop working. How does Bitcoin work? Bitcoin relies on a decentralized digital ledger called a blockchain to record all transactions securely across a network of computers. Miners use powerful hardware to verify these transfers and secure the network, earning new coins as a reward. What is a stablecoin? A stablecoin is a type of cryptocurrency designed. What is dividend growth? Dividend growth is when a company consistently increases the cash payouts it gives to its shareholders over time. It is a great sign of a healthy, stable business that wants to share its ongoing success with investors. What is an economic moat? An economic moat refers to a business's unique ability to maintain a strong competitive edge over rivals to protect its long-term profits. Companies like Apple or Coca-Cola have great examples of these durable advantages. What is a reverse stock split? A reverse stock split is when a company merges its existing shares together to decrease the total count while increasing the price per share. Businesses usually do this to meet exchange minimum price requirements and look more attractive to buyers. What is an IPO? An IPO is when a private company offers its shares to the general public for the very first time on a stock exchange. It is a huge milestone for businesses looking to raise capital and grow even bigger. What is a crypto bull market? A Crypto bull market is a cheerful period when digital asset prices are steadily rising and investor confidence is running super high. Everyone gets really excited watching the charts go up during these energetic phases. What is dividend payout ratio? The dividend payout ratio shows the portion of net income a company distributes to its shareholders as cash dividends. It helps us see how much profit is being shared versus how much is being kept to grow the business further. Why are stablecoins used? Stablecoins are pegged to traditional currencies like the US dollar to help traders avoid wild market swings while keeping their funds inside the digital ecosystem. Why does the down payment matter? A down payment reduces the total amount you need to borrow, which lowers your monthly mortgage payments and helps you secure a better interest rate. What is trailing PE? The trailing price-to-earnings ratio is calculated by taking a company's current stock price and dividing it by its actual earnings per share over the past 12 months. It is a super handy metric for seeing how much investors are paying for every dollar the business recently earned. What is a savings rate? Your savings rate is simply the percentage of your take-home pay that you manage to set aside instead of spending. It is a fantastic benchmark for measuring how quickly you are building up your financial safety net. How can someone become debt-free faster? Paying off high-interest loans first and putting extra money toward your principal balances can really speed up your journey to becoming debt-free. Should you use an emergency fund to pay debt? Generally, it is wise to keep your emergency fund intact for unexpected life events rather than draining it to pay off debt. You want to maintain that safety net so you do not have to rely on new credit if an emergency pops up. What is tangible book value? Tangible book value measures a company's physical net asset worth by taking total assets, subtracting liabilities, and removing intangible assets like patents and goodwill. It gives us a really clear picture of what the business would technically be worth if it sold off all its physical items today. What is sector rotation? Sector rotation is an investment strategy where folks move their money from one industry group to another as the economic cycle shifts. People do this to capture growth in whichever sector is performing best during that particular phase. How does debt affect mental stress? Carrying heavy debt can cause a lot of constant worry and anxiety, which really takes a toll on your overall peace of mind. Making a solid plan to tackle what you owe can lift a huge weight off your shoulders. How is GDP calculated? Gross domestic product is figured out by adding up total consumer spending, business investments, government purchases, and net exports. It gives us a broad overview of our entire economic health. What is the difference between saving and investing? Saving is putting cash safely aside in a bank account for short-term goals or emergencies, whereas investing involves purchasing assets like stocks or bonds with the goal of growing your wealth over the long haul. What is a buy now pay later service? A buy now pay later service lets you purchase items immediately and split the total cost into smaller, scheduled installments, often without any interest if paid on time. Why is payment history important? Lenders check your payment history to see if you have a reliable track record of paying your bills on time. It is actually the biggest factor in determining your overall credit score. How much should you keep in your checking account? It is usually best to keep about 1 month of living expenses in your checking account to cover daily bills comfortably. Anything beyond that extra cushion is often better put toward your savings or investments. What is a seed phrase? A seed phrase is a sequence of random words generated by your cryptocurrency wallet that acts as a secure backup to recover your digital assets. What is economics? Economics is all about studying how societies choose to use their limited resources to make, distribute, and consume goods and services. It helps us understand everything from daily pricing to big picture financial trends. Is lump sum investing better than dollar cost averaging? Lump sum investing puts all your cash to work right away, which usually wins out over time since markets tend to rise historically. Dollar cost averaging, on the other hand, spreads your purchases out to help soften the blow if the market dips right after you buy. What is a bear call spread? A bear call spread is an options strategy used when you expect an asset's price to drop or stay flat. You sell a lower strike call and buy a higher strike call to limit your potential risk. What is gross rental income? Gross rental income is the total amount of money a property brings in from tenants before you subtract any operating expenses, taxes, or maintenance costs. What is an ex-dividend date? An ex-dividend date is the crucial deadline you need to know before buying a stock if you want to receive the upcoming dividend payout from the company. What is bankruptcy? Bankruptcy is a legal proceeding for individuals or businesses that cannot pay their outstanding debts, allowing them to either wipe out liabilities or create a structured repayment plan. What is a portfolio hedge? A portfolio hedge acts like an insurance policy for your investments by using specific trades to offset potential losses if the market suddenly drops. What is ETF creation and redemption? ETF creation and redemption is the clever mechanism authorized participants use to keep the fund's market price closely aligned with its underlying asset value. What is tax-deferred investing? Tax-deferred investing lets you delay paying income taxes on your investment gains until you actually withdraw the money, usually in retirement. This gives your balance a great opportunity to compound and grow even faster over the years. Is Bitcoin a good long-term investment? Bitcoin is definitely a popular choice for those looking at digital currencies, but it can be super volatile compared to traditional assets. It really depends on your personal risk comfort and overall financial goals. What does beta measure? Beta is a handy metric that shows how much a stock's price tends to bounce around compared to the overall market. If a stock has a beta higher than 1, it usually means it is more volatile than the broader market. What is a market cycle? A market cycle refers to the recurring patterns of expansion and contraction that the economy and financial markets go through over time. It helps us understand the natural shifts between bull and bear phases. What is a variable rate mortgage? A variable rate mortgage is a home loan where the interest rate can change periodically based on overall market conditions, which means your monthly payments might go up or down over time. How are stock market indexes created? Stock market indexes are put together by selecting a group of representative companies, often based on their market size or industry sector. A committee then tracks their collective performance to give us a good snapshot of how the broader market is doing. What defines a recession? A recession is officially characterized by a significant decline in economic activity spread across the economy, lasting for more than a few months. Usually, economists look for 2 consecutive quarters of negative growth in the gross domestic product to confirm it. What is financial risk? Financial risk is the chance that you might lose some or all of your invested money, or that an investment will not earn as much as you expected. It really comes down to the uncertainty tied to any financial decision. What is a lockup period? A lockup period is a set time frame where early investors or company insiders are not allowed to sell their shares after a public offering, which helps keep the stock price stable. What is inventory turnover? Inventory turnover is a helpful financial metric that shows how many times a business sells and replaces its stock of goods over a specific period. A higher ratio generally means the company is doing a great job moving products off the shelves quickly. Which assets tend to perform poorly during inflation? When inflation heats up, cash and traditional fixed income bonds often struggle because their purchasing power gets eroded over time. On the flip side, tangible items like real estate and commodities usually hold their ground much better. Why do central banks lower interest rates? Central banks cut borrowing costs to make loans cheaper, which encourages people and businesses to spend and invest more to stimulate a slowing economy. What is an option spread? An option spread involves simultaneously buying and selling multiple options contracts of the same type to limit potential losses while defining your maximum profit. It is a neat strategy for managing risk in different market conditions. What is a cyclical stock? A cyclical stock is a share in a company whose performance tends to rise and fall right along with the overall health of the economy. These businesses usually sell discretionary items that people buy more of during good economic times. What is a mortgage renewal? A mortgage renewal happens when your current term ends and you sign a new agreement with your lender, often to adjust your interest rate or payment schedule. It is a great chance to shop around and see if another offer fits your goals better. What is a stock option? A stock option is a contract that gives you the right to buy or sell shares at a set price within a specific time frame. It is a neat way to participate in market movements without having to own the actual shares right away. What does the Sharpe ratio measure? The Sharpe ratio measures the performance of an investment compared to a risk-free asset, adjusted for its overall volatility. It helps you see if the returns are coming from smart choices or just taking on too much danger. What is tangible book value? Tangible book value calculates a company's net worth by taking its total assets, subtracting intangible items like patents and goodwill, and then removing all liabilities. It gives you a realistic look at what the business would actually be worth if it had to sell off everything physical today. What are the advantages of REITs? Real estate investment trusts let you own a slice of massive properties like apartment complexes or malls without needing a huge down payment. Plus, they are required to pay out most of their income as dividends, which is fantastic for earning regular cash flow. Why do companies cut dividends? Companies usually trim their dividend payouts when business slows down, or they need to keep cash on hand to protect their financial health during tough patches. It is definitely a bummer for income seekers, but sometimes management has to prioritize keeping the core business stable. What is a leveraged ETF? A leveraged ETF uses financial derivatives and debt to amplify the daily returns of an underlying index. They can boost your gains on a good day, but they also carry much higher risks if the market moves against you. What is a bull call spread? A bull call spread involves buying a call option at a lower strike price while simultaneously selling another call option at a higher strike price. It is a handy strategy to limit your upfront cost and cap your potential risk when you expect a moderate price increase. What is demand destruction? Demand destruction happens when high prices cause consumers and businesses to permanently or significantly cut back on their usage of a good or service. It usually kicks in after a severe commodity spike when people simply find cheaper alternatives or use less. What is a call option? A call option is a contract that gives you the right, but not the obligation, to purchase shares at a set price before a specific expiration date. Why do investors sell covered calls? Investors sell covered calls to generate some extra income from the shares they already own, while hoping to capture a bit of premium. It is a neat tactic if you are neutral on the stock and do not mind parting with your shares if the price shoots past the strike limit. Why can options lose value after earnings? Options can lose value after earnings because of a drop in implied volatility, which is often called the crush. Even if the stock moves in your direction, that sudden decrease in expected price swings can drain the value right out of the contract. What is the Nasdaq? The Nasdaq is a major stock exchange that heavily features top technology and growth companies. It is a fantastic benchmark for seeing how the tech sector is performing overall. What is the labor force participation rate? The labor force participation rate measures the percentage of the working age population that is either currently employed or actively seeking a job. It is a key metric economists use to see how many people are participating in the economy. What is revenue? Revenue is the total amount of money a business brings in from selling its goods or services before any expenses are taken out. What is goodwill? Goodwill is an intangible asset that shows up on a company's balance sheet when it buys another business for more than the net value of its identifiable assets. It basically represents things like brand reputation, loyal customer relationships, and proprietary technology. What is delta hedging? Delta hedging is a risk management strategy where an investor buys or sells underlying shares to neutralize the directional price risk of an options position. By keeping the overall delta close to zero, you can protect your portfolio from sudden market swings. What is a high-yield ETF? A high-yield ETF is a fund that pools together bonds or stocks known for paying out generous dividends. It is a popular choice for investors looking to generate steady cash flow from their portfolio. Why do housing prices rise? Housing prices usually go up when buyer demand outpaces the available supply of homes on the market. Low interest rates and growing populations can also push those costs higher over time. What is gross rental income? Gross rental income is the total amount of money a landlord collects from tenants before paying any property expenses like maintenance or taxes. What is a rate hike? A rate hike happens when a central bank raises its benchmark interest rate to help cool down inflation. It makes borrowing costlier for everyone, which can slow down overall economic activity. Is diversification overrated? Diversification is definitely not overrated because spreading your investments across different sectors helps protect your portfolio if one particular industry takes a sudden hit. It is a classic way to manage risk and keep your financial journey smooth. What is a centralized exchange? A centralized exchange is a platform managed by a single company that helps people buy and hold digital assets like cryptocurrencies. It acts like a trusted middleman to match buyers and sellers easily. What is an acquisition? An acquisition happens when one company purchases most or all of another firm's shares to take complete control of its operations. What is thematic investing? Thematic investing is all about putting your money into specific trends or industries changing the world, like artificial intelligence or renewable energy. It lets you back the big ideas you truly believe in. What is a hard credit inquiry? A hard credit inquiry happens when a lender checks your credit report after you apply for a new loan or credit card, which can cause a small temporary dip in your score. What is buying power? Buying power is basically the amount of goods and services you can purchase with a specific amount of money. Inflation can sometimes lower it over time if prices go up faster than your income. What is bid-ask spread? The bid-ask spread is simply the gap between the highest price a buyer is willing to pay and the lowest price a seller will accept for an asset. It is basically the cost of executing a trade right away. How do interest rates affect consumers? When interest rates go up, borrowing money gets more expensive for everyday purchases like mortgages and car loans. This usually encourages people to save more and spend a bit less. How can you improve your debt-to-income ratio? You can boost your debt-to-income ratio by either paying down your existing balances or finding ways to increase your monthly earnings. Keeping that percentage low makes lenders much more confident when you apply for new credit. Why do traders lose money? Traders often take losses because of sudden market swings or letting emotions drive their choices instead of sticking to a solid plan. It is a tough lesson, but learning risk management is key to staying in the game. How can payroll deductions help you save? Payroll deductions automatically transfer a set amount of your paycheck straight into your savings or retirement account before you even have a chance to spend it. It is a super easy way to build your nest egg without having to think about it every month. How are investment gains taxed? Investment gains are typically taxed as capital gains, and the rate usually depends on how long you held the asset before selling it. Profits from investments kept for over a year often get taxed at a lower rate than short-term trades. What is the Dow Jones? The Dow Jones is a famous stock market index that tracks 30 of the largest and most influential publicly traded companies in the United States. It gives us a quick snapshot of how the overall market is doing. How can you measure ETF diversification? You can check an ETF's diversification by looking at its underlying holdings, sector weightings, and geographic spread to ensure your money isn't overly concentrated in just one spot. What is deflation? Deflation is when consumer prices drop across the board and the purchasing power of money goes up over time. While cheaper goods sound nice, it can actually slow down economic growth if people keep delaying purchases in hopes of even lower prices. What is a stablecoin? A stablecoin is a type of digital currency designed to keep its value pegged to a reserve asset like the US dollar to minimize price swings. It gives crypto users a handy way to store value without all the usual market volatility. Why should financial accounts use strong passwords? Strong passwords protect your hard-earned money and personal information from unauthorized access and online theft. Keeping your login details secure ensures that hackers cannot easily break into your accounts and steal your funds. Are buy now pay later plans risky? Buy now pay later plans can tempt you into overspending, since breaking payments into smaller chunks makes things look cheaper than they really are. If you miss a payment deadline, you might get hit with steep late fees, so it is always smart to use them with caution. What are the risks of cryptocurrency? Crypto prices can swing wildly in a matter of hours, making it a super risky asset class. Plus, digital wallets lack the standard fraud protections you get with traditional banking accounts. Which is gamma measure? Gamma measures how fast an option's delta changes when the underlying stock price moves. It basically helps traders see how sensitive their position's momentum is to sudden price shifts. What is amortization? Amortization spreads out a loan payment into equal periodic installments over its lifetime. Each payment covers both the interest charges and a portion of the original principal balance. What is a payment date? A payment date is simply the official deadline when your bill or loan installment is due to be paid. Hitting that target on time helps you avoid pesky late fees and keeps your credit looking great. What is EBITDA? EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It is a great metric to look at a company's true operational profitability without letting financing or accounting choices cloud the picture. What is delta? Delta measures how much an option's price is expected to move when the underlying stock price changes by $1. It is super helpful for traders figuring out their directional risk. Why would someone buy a call? Investors buy call options when they expect a stock's price to rise significantly. It gives them the right to purchase shares at a set price later on, which can lead to great profits if the market goes up. How is total return calculated? Total return is figured out by adding all the cash distributions and price gains together, then dividing that sum by your original investment cost. It gives you a complete picture of how well your asset has performed over time. What is a soft landing? A soft landing happens when a central bank manages to cool down inflation by raising interest rates without accidentally triggering a full economic recession. It is a super delicate balancing act to get right. What is an accumulating ETF? An accumulating ETF automatically reinvests all the dividends it earns right back into the fund instead of paying them out to you. It is a super handy way to grow your wealth over time without having to manually buy more shares. What is socially responsible investing? Socially responsible investing is a strategy where you put your money into companies that make a positive impact on society and the environment. It lets you grow your wealth while supporting causes you truly care about. What are the risks of cryptocurrency? Crypto prices can swing wildly in a matter of seconds, making them super unpredictable. Plus, you have to worry about strict regulations and the risk of digital security threats. What makes an ETF attractive for long-term investors? ETFs are fantastic for long-term holding because they give you instant diversification across dozens or even hundreds of assets with just a single trade. Plus, they usually come with much lower management fees than traditional mutual funds. What is monetary policy? Monetary policy refers to the actions taken by a central bank to manage the money supply and interest rates to keep the economy stable. What is a financial institution? financial institution is basically any company that handles money matters, like banks, credit unions, and insurance firms, helping people save, borrow, and manage their funds safely. How much interest do you pay on a loan? The interest you pay on a loan depends heavily on your credit score, the current market rates, and the lender you choose. Generally, having a stronger credit history helps you qualify for a much lower percentage rate. What determines a property's value? A property's market value is mainly shaped by its exact location, overall condition, recent local sales, and current economic conditions. These key factors come together to determine what buyers are willing to pay. What is a grace period? A grace period is a set amount of time after your billing date where you can pay your credit card bill without getting hit by late fees or extra interest. What is an emerging markets ETF? An emerging markets ETF lets you invest in companies located in developing countries experiencing rapid growth. It is a fun way to tap into international opportunities while spreading out your risk. Why would someone buy a call? An investor usually buys a call option because they expect the underlying asset's price to shoot up. It gives them the right to purchase shares at a set price later on, which can lead to fantastic profits if the market goes their way. How can you stop impulse spending? To curb impulse buying, try giving yourself a mandatory 24-hour waiting period before purchasing any non-essential items. It gives your brain time to cool off and helps you figure out if you really need it. What happens when you make extra loan payments? Counting down extra cash on your loan principal actually shrinks the total interest you will owe over time. It is a super smart strategy to wipe out your debt much faster. What is forward PE? Forward PE is a valuation metric that looks at a company's estimated future earnings rather than past results to help investors gauge its potential growth. Why does consumer confidence matter? Consumer confidence is a huge deal because when people feel secure about their jobs and finances, they tend to spend more, which really drives the whole economy forward. How do banks determine credit limits? Banks figure out your credit limit by looking at your income, existing debt load, and your past credit history to see how safely you can borrow. What is wage inflation? Wage inflation happens when employee pay increases across the board, which can sometimes push businesses to raise their prices to keep up with higher labor costs. What is tax-free investing? Tax-free investing lets your money grow and gives you withdrawals without paying taxes on the gains, usually through accounts like a Roth IRA or municipal bonds. It is a fantastic way to keep more of your hard-earned profits for the future. What is smart beta investing? Smart beta investing blends traditional index tracking with active strategies by targeting specific factors like low volatility or high dividends to potentially beat the wider market. How does debt affect mental stress? Carrying heavy debt can cause major anxiety and constant worry about making ends meet, which really takes a toll on your overall peace of mind. How does a stock exchange work? A stock exchange acts like a giant digital marketplace where buyers and sellers come together to trade company shares quickly and securely. It makes sure every trade is fair and transparent. What What is a 0 days to expiration option? A 0 days to expiration option is a contract that expires on the very same trading day it gets bought or sold. It makes for some seriously fast-paced trading action. What is a balance sheet? A balance sheet is a financial statement that gives a snapshot of a company's assets, liabilities, and shareholder equity at a specific moment in time. What is a commodity ETF? A commodity ETF is a fund that tracks the price of physical goods like gold, oil, or agricultural products, without requiring you to actually store them yourself. What is free cash flow? Free cash flow measures the cash a company has left over after paying all its operating expenses and capital expenditures. It shows how much money is available for dividends, debt reduction, or new growth projects. What is a hostile takeover? A hostile takeover happens when an outside group acquires enough shares to take control of a company against the wishes of its current board of directors. What is an ex-dividend date? The ex-dividend date is the cutoff day when you must own a stock to qualify for its upcoming dividend payout. If you purchase the shares on or after this date, the previous owner gets that specific reward instead. Why should you pay more than the minimum? Paying more than the minimum on your bills helps you clear the principal balance much faster and saves you a ton of money on accumulating interest charges over time. Why is cryptocurrency volatile? Cryptocurrency values bounce around so much because the market is still relatively young and heavily influenced by shifting hype, breaking news headlines, and massive trades from large investors. What is a fixed rate mortgage? fixed-rate mortgage is a home loan where your interest rate stays completely the same for the entire life of the loan. That means your monthly principal and interest payments never change, which makes budgeting for your housing costs super easy. Why should financial accounts use strong passwords? Strong passwords keep unauthorized people from breaking into your financial accounts and stealing your hard-earned money. It is one of the easiest ways to keep your personal information totally safe online. What is theta? Theta is an options metric that measures how fast a contract loses its value as time ticks closer to its expiration date. It is basically a way to track the decay of time value. What are the risks of real estate leverage? Real estate leverage lets you buy properties with borrowed money, but if property values drop, you could end up owing more than the home is actually worth. Plus, monthly mortgage payments still have to be made, even if you don't have a tenant renting the space. What is accounts receivable? Accounts receivable represents the money that customers owe a business for products or services they have already delivered on credit. It is counted as a current asset on the balance sheet because the company expects to collect those funds in the near future. Why are payday loans expensive? Payday loans carry extremely high interest rates and short repayment terms, which can quickly trap borrowers in a difficult cycle of debt. It is usually much safer to explore other options if you ever need quick cash. What is a money market fund? A money market fund is a very safe type of mutual fund that invests in short-term, high-quality debt issued by governments or corporations. It is designed to keep your principal stable while giving you a modest return. Why is cash flow important? Cash flow is super important because it ensures a business always has enough actual money on hand to pay bills, cover payroll, and handle everyday operating expenses without running into trouble. That's a great question. What are your thoughts on it? What is gross margin? Here is the JSON requested. How does a line of credit work? Here is the JSON requested. What does investment alpha mean? Investment alpha is basically a way to measure how much an investment outperforms a broad market benchmark. It shows the value that an active manager adds beyond what the general market delivered. What is an out-of-the-money option? Here is the JSON requested. JSON. What is a bank's provision for credit losses? That's a great question. What are your thoughts on it? What is compound interest? That's a great question. What are your thoughts on it? What is operating margin? That's a great question. What are your thoughts on it? What is a credit report? A credit report is a detailed history of your borrowing and repayment habits, which lenders use to see how reliably you pay back debts. What is an installment loan? An installment loan is a set amount of. Why do stock prices change? That's a great question. What are your thoughts on it? What is a financial goal? That's a great question. What are your thoughts on it? What is a dividend? That's a great question. What are your thoughts on it? What is risk tolerance? Risk tolerance is basically how comfortable. Why is the 60/40 portfolio popular? The 60/40. What is intrinsic value? That's a great question. What are your thoughts on it? is a gamma squeeze? A gamma squeeze happens when a massive rush to buy call options forces market makers to buy up the underlying stock to cover their risk, which sends the price skyrocketing even faster. What is herd behavior? That's a great question. What are your thoughts on it? Is a concentrated portfolio better for wealthy investors? That's a great question. What are your thoughts on it? Why are stablecoins used? That's a great question. What are your thoughts on it? What is a leveraged ETF? A leveraged ETF uses financial derivatives and debt to amplify the daily returns of a specific index or asset. So if the underlying market goes up by 1%, a 2 times leveraged ETF aims to gain 2% that day. But the losses are multiplied just as quickly if it drops. What is a cash flow statement? That's a great question. What are your thoughts on it? What is underemployment? Underemployment happens when someone is working in a What is a home equity loan? That's a great question. What are your thoughts on it? What is lump sum investing? Lump sum investing means taking all the money you plan to invest and putting it into the market all at once, rather than spreading it. What is FOMO in investing? FOMO stands for fear of missing out in investing. It happens when people see a stock or crypto rocketing up and rush to buy it out of panic that they'll miss out on big profits. What is price to book? The price to book ratio compares what is a bear market? A bear market happens when stock prices drop by 20%. What defines a recession? A recession is typically defined as a significant decline in economic activity, usually marked by a drop in gross domestic product, lasting for a certain period of time, often 6 months or more. What is implied volatility? Implied volatility is basically a metric that shows how much the market expects a stock's price to fluctuate in the future. Higher numbers usually mean investors are anticipating some big price swings ahead. What is EV表TDA? The enterprise value to EBITDA ratio is a popular metric used to evaluate a company's overall valuation by comparing its total value to its earnings before interest, taxes, depreciation, and amortization. Is diversification overrated? Not at all. Spreading your investments is actually What is a stop-loss order? A stop-loss order is an automatic instruction you set with your broker to sell a stock once its price hits a specific lower limit. It helps protect your investments by capping potential losses if the market suddenly takes a downturn. What is open interest? Open interest refers to the total number of active. How does issuing shares dilute investors? When a company creates and sells new shares, what interest rate is considered high for debt? Generally, interest rates reaching double digits. What defines a recession? Broadly speaking, an economy enters a How does a stock exchange work? Think of a stock exchange as a bustling digital marketplace where buyers and sellers come together to trade shares safely and quickly. What is industrial real estate? Industrial real estate refers to properties specifically used for business operations like manufacturing, warehousing, and logistics. It includes everything from giant distribution hubs to factories where goods are produced and stored. Is timing the market ever possible? Now, someone might get lucky once or twice. What is the opportunity cost of saving cash? The opportunity cost of holding onto cash is the potential growth and returns you miss out on by not investing it elsewhere. What is a HELOC? A HELOC, or home equity line of credit, lets you borrow money using the equity you've built up in your house as collateral. It functions a bit like a credit card, where you can draw funds as needed. How do you determine risk tolerance? Determining your risk tolerance is all about looking at your financial goals, investment timeline, and how comfortable you are with market ups and downs. It really helps to find a balance that lets you grow your wealth without losing sleep over short-term drops. How does fear affect markets? Fear can cause investors to sell off their assets in a panic, leading to sharp market drops and increased volatility. It really tends to drive prices down quickly as everyone rushes for the exits at the same time. What is a HELOC? A HELOC, or home equity line of credit, lets you tap into the equity you have built in your house. It operates similar to a revolving credit line, where you can borrow money as needed and pay it back over time. How do investors value a company? Investors figure out what a company is worth by looking at things like its revenue, profit margins, future growth potential, and how it compares to other businesses in the same industry. What is bid-ask spread? The bid-ask spread is simply the difference between the highest price a buyer is willing to pay and the lowest price a seller is willing to accept for an asset. What is a three-fund portfolio? That's a great question. What are your thoughts on it? What is deflation? Deflation is when the general price level of goods and services drops across the economy, which usually increases the purchasing power of your money over time. What is a central bank balance sheet? A central bank's balance sheet tracks all its financial assets and liabilities, showing how much money it's pumping into the economy or pulling back. What is a large cap stock? Large cap stocks represent shares in massive, well-established companies with huge market values, usually over $10 billion. They tend to be much more stable and reliable investments during market bumps. What is a hard landing? A hard landing happens when a booming economy rapidly slows. What is beta? Beta is a metric that measures how much a stock's price bounces around compared to the overall market. A higher beta means the stock is typically more volatile. What is an NFT? An NFT, or non-fungible token, is a unique digital item stored on a blockchain that represents ownership of specific art or media. How do you calculate savings rate? Your savings rate is simply the percentage of your take-home pay that you manage to tuck away rather than spend. You figure it out by dividing the total amount you saved by your total income and multiplying that by 100. What is recurring revenue? Recurring revenue is money that a business expects to receive on a regular, predictable schedule, like a monthly subscription. What does an investment bank do? Investment banks help companies raise money by issuing stocks and bonds, and they also guide big businesses through mergers and acquisitions. What is a credit union? A credit union is a member-owned financial cooperative that offers similar services to a traditional bank, usually with lower fees and better savings rates, because they operate to serve their members rather than make a profit. What is a stop-loss order? A stop-loss order is an instruction you give your broker to automatically sell a stock if its price drops to a certain level, which helps limit your potential losses. What is the Rule of 72? The Rule of 72 is a quick trick to figure out roughly how long it will take for your investments to double by dividing 72 by your annual interest rate. How does an ETF work? An exchange-traded fund pools money from many investors to buy a whole basket of assets, which lets you easily own a diversified mix through a single share. What defines a market correction? A market correction happens when a major index drops by 10% or more from its recent peak, which is actually pretty normal as things cool off. Why is yield chasing dangerous? Yield chasing can be really risky because super high. What is a protective put? A protective put is an option strategy where you buy a put option to guard your stock against sudden downward price drops. What is dollar cost averaging? Dollar cost averaging is when you invest a set amount of money on a regular schedule, no matter what the market is doing, which helps you buy fewer shares when prices are high and more when they are low. What is a short-term financial goal? A short-term financial goal is a money target you want to hit soon, usually within a year, like saving up for a fun weekend trip or building a starter emergency fund. What is thematic investing? Thematic investing is when you put your money into companies driving a specific long-term trend, like clean energy, robotics, or artificial intelligence. What is tax efficiency? Tax efficiency is all about managing your investments, so you get to keep more of your hard-earned returns by minimizing the taxes you owe. What is options flow? Options flow refers to tracking large institutional trades in the options market to see where big investors are placing their big bets. What is a portfolio hedge? A portfolio hedge is essentially an insurance policy for your investments, where you take an offsetting position to protect your overall holdings against potential market drops. What is a bond ETF? A bond ETF is a basket of fixed income securities that trades on an exchange just like a regular stock, making it super simple to add diversified debt instruments to your portfolio. What is physical ETF replication? Physical ETF replication is simply when a fund actually buys the exact underlying securities of an index to match its performance, rather than using derivatives. What is a defined benefit pension? A defined benefit pension is a traditional retirement plan where your employer guarantees you a specific monthly payout once you retire, usually based on your salary history and how many years you work there. What is a money mindset? A money mindset basically describes your overall attitude and beliefs regarding finances, which really shapes how you choose to save, spend, and invest your cash. Why do meme stocks become popular? Meme stocks usually blow up because enthusiastic online communities rally together on social media to hype up the hype and drive up the share price. What is long-term investing? Long-term investing is all about parking your money in great assets and letting them grow steadily over many years, ignoring the daily market ups and downs. What is return on assets? Return on assets is a helpful profitability metric that shows how efficiently a company uses its total property and equipment to generate net income. What is operating cash flow? Operating cash flow tracks the actual cash money a business brings in from its core daily operations, leaving out outside financing activities. It is a fantastic way to see if a company generates enough liquid funds to sustain and grow its business. Why are credit card cash advances expensive? Credit card cash advances come with steep fees and immediately start accruing interest at a much higher rate than regular purchases. Plus, there is no grace period to pay it off. What causes impulse purchases? Impulse buying usually happens when emotions take over, and clever marketing triggers an instant desire to grab something right away without thinking it through. What is a recession? A recession is an economic downturn defined by a significant drop in overall business activity and gross domestic product lasting for several months. What is a lockup period? A lockup period is a set time frame where investors are legally prohibited from selling or trading their newly acquired shares, usually seen right after an initial public offering. How many credit cards should someone have? Most folks usually find that having just one or two well-managed cards is plenty to handle daily expenses and build good credit without getting overwhelmed. What happens when someone defaults on a loan? When someone defaults on a loan, it means they have failed to make the required payments for a long time, which severely damages their credit score and can lead to the lender taking legal action or seizing collateral. What is slippage? Slippage is the difference between the expected price of a trade and the actual price at which the order executes, which often happens when market volatility is high. What is a mutual fund? A mutual fund pools money from many people to buy a big mix of different stocks and bonds, which instantly spreads out your risk. What is the stock market? The stock market is essentially a giant global marketplace where pieces of publicly traded companies are bought and sold every single day. What is a 0 days to expiration option? Zero days to expiration options are contracts that expire on the very same trading day you buy them, which makes them super fast-paced and risky. How is a credit union different from a bank? A credit union is a non-profit financial cooperative owned by its members, whereas a bank is a for-profit corporation owned by its shareholders. What is a business model? A business model is basically the master plan a company uses to make money and deliver value to its customers. It outlines how they sell their products and keep things running profitably. What is fractional reserve banking? Fractional reserve banking is a system where commercial banks are only required to hold a small fraction of their customer deposits as cash on hand, allowing them to lend out the rest to stimulate economic activity. How is GDP calculated? Gross domestic product is usually Why does time horizon matter? Your time horizon dictates how much risk you can comfortably take, since a longer timeline lets you ride out market dips and bounce back. Why should investors avoid emotional decisions? Making financial choices based on feelings often leads to buying high and selling low out of panic. Staying calm helps keep our long-term goals on track. Why should you track your expenses? Tracking your expenses helps you see exactly where your money goes every month, so you can spot unnecessary spending and reach your savings goals faster. What is gross margin? Gross margin is the money a company keeps after paying the direct costs associated with producing its goods, shown as a percentage of total revenue. What is capital appreciation? Capital appreciation happens when an investment grows in value over time above the original purchase price. What is an apartment REIT? An apartment REIT is a company that owns and manages residential rental properties, letting everyday people invest in real estate without buying physical buildings. What is downside risk? Downside risk is simply the chance that an investment could drop in value or lose money. It helps us figure out the absolute worst-case scenario for a trade. What is time value? The time value of money means a dollar you have right now is worth more than the same dollar in the future because of its potential earning capacity. What is dealer gamma? Dealer gamma measures how fast market makers have to adjust their hedging positions as the underlying stock price moves around. It plays a huge role in how volatile options trading can get. What is net worth? Net worth is basically all your assets added together minus any debts or liabilities you currently owe. It gives you a clear snapshot of your total financial health. What happens during an economic expansion? During an economic expansion, businesses typically see rising revenues and increased hiring as consumer demand grows across the board. It is a wonderful phase where overall financial activity really starts to pick up speed. What is a normal yield curve? A normal yield curve slopes upward, meaning longer-term bonds offer higher interest rates than short-term ones because investors take on more risk over time. What is trailing PE? Trailing PE looks at a company's share price compared to its actual earnings per share over the past 12 months. It is a handy metric to see if a stock is reasonably priced based on past performance. Should investors own multiple overlapping ETFs? Owning multiple overlapping ETFs usually just means you are doubling up on the exact same underlying assets without true diversification. It is usually much simpler to pick a single well-rounded fund that covers your goals. What is a strangle? A strangle is an option strategy where you buy a call and a put at different strike prices, hoping to profit from a massive price swing in either direction. What is a defensive stock? A defensive stock is a company that usually keeps performing pretty steadily, even when the rest of the market is having a rough time. Think of businesses that provide everyday essentials like utilities or groceries, since people always need those no matter what. Why can a cheap stock stay cheap? An inexpensive share price doesn't always mean a bargain because the underlying business might be facing long-term structural challenges or declining industry trends. Investors call these value traps when the company lacks a catalyst to spark a turnaround. How can you measure ETF diversification? You can measure ETF diversification by checking the fund's underlying holdings, sector weightings, and asset allocation. Looking at those details helps you see if your investment is spread across different industries or too heavily concentrated in just one area. What is a soft landing? A soft landing happens when central banks manage to cool down high inflation through rate hikes without tipping the entire economy into a recession. It is basically the ultimate balancing act for monetary policy. What is the producer price index? The producer price index tracks the average changes in prices that domestic producers receive for their goods and services. It is a helpful gauge for spotting inflation pressures early before they actually hit consumers at the retail level. What is a momentum stock? A momentum stock is a company whose shares are rapidly climbing in price because heavy buying volume and strong positive sentiment are pushing them higher. Traders love jumping into these names to ride the wave of short-term excitement. What is preferred stock? Preferred stock is a unique type of equity that usually pays fixed dividends and takes priority over common shares when it comes to getting paid out if the company runs into trouble. Why do companies pay dividends? Companies share a slice of their profits as dividends to reward shareholders for sticking with them and to show the business is financially healthy. What is real asset investing? Real asset investing means putting your money into tangible things that have physical value, like real estate, infrastructure, or commodities. It is a fantastic way to help protect your portfolio against inflation, since these physical items usually hold their intrinsic worth. What is a vertical spread? A vertical spread involves trading options by simultaneously buying and selling contracts of the same type and expiration date, but at different strike prices to limit potential gains and losses. What is the bid price for an option? The bid price represents the absolute highest amount that any potential buyer is currently willing to pay for an option contract in the market. What is an ETF expense ratio? An ETF expense ratio is basically the what is a stable coin? A stablecoin is a special kind of digital currency designed to keep its value pegged to a steady asset like the US dollar. This helps people avoid the wild price swings usually seen with other crypto tokens. What happens during a recovery? During an economic recovery, businesses start ramping up production again, employment levels gradually improve, and consumer spending begins to bounce back from a slump. What is revenue growth? Revenue growth measures how much a company's total sales increase over a specific time period. It is a key sign that a business is expanding its market share and bringing in more money. What is dividend payout ratio? The dividend payout ratio shows the percentage of net income a company actually pays out to shareholders as dividends. It helps investors see how sustainable those payouts are. What is an acquisition? An acquisition happens when one company buys most or all of another company's shares to take control of it. Businesses usually do this to grow faster, expand into new markets, or team up with competitors. What is a retirement account? A retirement account is a special financial arrangement designed specifically to help you save and invest funds for your later years, while often offering nice tax benefits. What is crowdfunding? Crowdfunding is a way to raise money for a project or cause by collecting small amounts of cash from a large number of people online. What is a productivity recession? A productivity recession happens when economic output drops while hours worked stay the same or increase, meaning we are getting less efficient at producing goods and services. What is a calendar spread? A calendar spread is an option strategy where you buy and sell two options on the same asset with the same strike price, but with different expiration dates. How does interest rate affect loan payments? When interest rates go up, the cost of borrowing increases, which usually means your monthly loan payments will get higher too. What is stagflation? Stagflation is a tricky economic situation where high inflation happens at the same time as stagnant economic growth and high unemployment. It is pretty rare and definitely a tough challenge for policymakers to fix. What is smart beta investing? Smart beta investing is a cool strategy that mixes traditional indexing with active management by targeting specific factors like value or low volatility. What is economic growth? Economic growth is basically an increase in the production of goods and services in an economy over a specific period. It is usually measured by looking at the rise in the gross domestic product, which shows how much our overall economic activity is expanding. How long does it take to build good credit? Building a solid credit history usually takes around 6 months of active credit use, like paying a loan or credit card on time. It is all about showing lenders you are reliable over a consistent period. Which assets tend to perform poorly during inflation? During periods of high inflation, fixed income assets like traditional bonds tend to struggle because their set payouts lose purchasing power over time. Why should financial accounts use strong passwords? Strong passwords are super important for keeping your financial accounts safe from hackers and unauthorized access. They protect your hard-earned cash and personal info from digital threats. Can a great company be a bad investment? Yes, absolutely. Even an amazing business can turn out to be a poor investment if you pay too much for its shares up front. What is a dividend stock? A dividend stock is a share in a company that regularly pays out a portion of its earnings to shareholders as cash. It is a wonderful way to earn some extra passive income while holding your investments. What is quality investing? Quality investing is all about picking companies that have rock-solid balance sheets, steady earnings, and strong competitive advantages. It is a fantastic strategy for finding businesses that can thrive over the long haul. How do mortgage rates affect home prices? When mortgage rates drop, home prices usually go up because more buyers can afford to enter the market and compete for properties. What does CPI measure? A consumer price index tracks the average change in prices paid by urban consumers for a market basket of consumer goods and services over time. What is a mortgage term? A mortgage term is simply the length of time that your specific loan agreement and interest rate are locked in place before you have to renew or pay it off. Why can debt be dangerous? Debt can turn risky because high interest charges and mandatory repayments can quickly overwhelm your monthly cash flow if unexpected expenses pop up. What is inflation risk? Inflation risk happens when the purchasing power of your money declines over time, meaning your future dollars won't buy as much as they do today. Why is time in the market important? Staying invested for the long run lets you take advantage of compound growth and ride out short-term market drops without locking in losses. Why can options lose value after earnings? Options can drop in value after earnings because of something called an IV crush, where the expected volatility disappears once the big news is finally released. What is a savings account? A savings account is a secure bank deposit where you can safely stash your cash while earning a little bit of interest on your balance. What is a hard landing? A hard landing happens when an economy shifts rapidly from a period of growth into a full-blown recession, often triggered by aggressive central bank interest rate hikes to fight inflation. What happens when collateral is repossessed? When collateral gets repossessed, the lender takes back the asset you used to secure the loan to help cover the remaining debt you owe. What is an angel investor? An angel investor is an affluent individual who provides vital startup capital to early-stage companies in exchange for equity ownership. What investments can hedge against inflation? Treasury inflation-protected securities and real estate are fantastic choices because their values tend to rise right along with consumer prices. What is position sizing? Position sizing is simply figuring out how much money you should put into a single trade, so one bad outcome won't ruin your whole portfolio. What is gamma risk? Gamma risk measures how fast an option's delta changes when the underlying stock price moves, which can make hedging really tricky for traders near expiration. What is recurring revenue? Recurring revenue is money that a business expects to receive on a regular, predictable schedule, like a monthly subscription. How can you stay motivated to save money? Setting clear financial goals, like planning for a dream vacation or buying a home, makes saving feel much more rewarding. What is an unsecured credit card? An unsecured credit card is a line of credit that doesn't require you to put down a cash deposit as collateral to back up your spending. What is a total market index? A total market index tracks a huge basket of publicly traded companies to give investors a snapshot of the entire stock market's performance. Should you use an emergency fund to pay debt? Using your emergency fund to pay off debt can be risky because it leaves you unprotected if an unexpected expense pops up. It is usually smarter to keep that safety net intact while you steadily chip away at what you owe. Should retirees own stocks? Holding equities in retirement can actually be a great way to keep your savings growing and beat inflation, as long as you maintain a balanced mix to cushion against market drops. Why does theta matter? Theta measures how much value an option loses each day as time passes, which is super important for option sellers to keep track of. What is a stock exchange? A stock exchange is a centralized marketplace where buyers and sellers come together to trade shares of publicly held companies. What is longevity risk? Longevity risk simply means the danger of outliving your retirement savings because you end up living much longer than expected. It is a huge factor to plan for when building a long-term financial strategy. Why do lenders care about debt-to-income ratio? Lenders check your debt-to-income ratio to see how much of your monthly income already goes toward paying off existing loans. It helps them figure out if you can comfortably handle making payments on a new loan or mortgage. Why sell cash-secured puts? Selling cash-secured puts is a clever way to generate extra income while potentially getting paid to buy a stock you already want at a lower price. Plus, you hold cash in reserve to cover the trade, keeping things nice and secure. What happens during a recovery? During an economic recovery, business activity picks up and unemployment starts to drop as the market bounces back. Companies usually see higher profits, which tends to push stock prices upward. What is services PMI? The services PMI is an economic indicator that tracks the business conditions and health of the service sector. When it comes in above 50, it usually means the industry is expanding nicely. How does a stock exchange work? Think of it like an organized auction house where brokers place orders to buy and sell shares on behalf of investors. Everything happens super fast electronically to match up willing buyers with sellers seamlessly. Can options flow predict stock prices? Options flow can give us clues about where big institutional money might be leaning, but it is definitely not a crystal ball for predicting exact price movements. It is just another tool to help us gauge market sentiment. What is interest on a loan? Interest is basically the fee a lender charges you for borrowing their money, usually calculated as a yearly percentage of what you still owe. What is an inverse ETF? An inverse ETF is a special fund designed to profit when the underlying market index drops in value. It uses short selling and derivatives to move in the exact opposite direction of the market. What is ROE? ROE measures how much an option's price changes when interest rates shift up or down. It is usually more important for long-term options like LEAPS rather than short-term trades. What is the business cycle? The business cycle refers to the natural rise and fall of economic growth over time, moving through phases like expansion, peak, contraction, and trough. It helps us understand where the overall economy is heading. What is the 50-30-20 budgeting rule? The 50-30-20 rule is a super helpful guideline where you put half your income toward needs, 30% toward wants, and the remaining 20% into savings or paying down debt. What is an effective tax rate? Your effective tax rate is the actual average percentage of your overall income that you pay in taxes, calculated by dividing your total tax liability by your taxable income. What is operating leverage? Operating leverage looks at how a company's fixed costs impact its operating income as sales volume changes. Higher fixed costs mean that a small jump in sales can lead to a much bigger boost in profits. What is a stable coin? A stablecoin is a type of digital currency designed to keep its value pegged to a reserve asset like the US dollar. This helps reduce the wild price swings usually seen in crypto. What is a deep in the money option? A deep in the money option is a contract where the strike price is already way better than the current market price of the stock. Because it has so much intrinsic value, it tends to act a lot more like owning the actual shares themselves. What is financial risk? Financial risk is simply the chance that you might lose money on an investment or that a business will not make enough cash to cover its debts. It is a super important factor to weigh before jumping into any new market. What is gamma? Gamma is a metric that measures how fast an option's delta changes when the stock price moves. It essentially tells us how stable that delta is, which is super handy for traders watching risk. How do investors value a company? Investors figure out what a company is worth by looking at things like its earnings, future growth potential, and overall financial health. They often use methods like discounted cash flow analysis or compare it to similar businesses in the same industry. What is a gamma squeeze? A gamma squeeze happens when a massive wave of call option purchases forces market makers to buy up underlying shares rapidly to hedge their positions, driving the stock price even higher. It is a super intense market event that can create some wild upward momentum. What is customer acquisition cost? Customer acquisition cost is the total expense a company incurs to land a brand new buyer, factoring in all marketing and sales spend. It is a key metric for figuring out if a business model is truly sustainable. How does home equity build? Home equity grows as you steadily pay down your mortgage principal each month, and as the overall market value of your property increases over time. It is a really neat way to build up your personal net worth just by owning a place. What is a calendar spread? A calendar spread is an option strategy where you buy and sell two contracts on the same underlying asset with different expiration dates. It lets traders profit from time decay while managing their exposure. What is money supply? Money supply is simply the total amount of currency and other liquid assets circulating in an economy at any given time. Central banks keep a close eye on it because it directly influences inflation and economic growth. What is consumer proposal? A consumer proposal is a legal agreement where you work with a licensed professional to pay back a portion of your debts over a set period. It is a helpful alternative to bankruptcy that gives you a clearer path to getting back on track financially. When does refinancing make sense? Refinancing usually makes the most sense when interest rates drop significantly below your current rate, allowing you to lower your monthly payments or shorten your loan term. What is dividend growth? Dividend growth happens when a company consistently increases the cash payouts it gives to its shareholders over time. It is a wonderful sign of a healthy, mature business that wants to reward its investors regularly. What is core inflation? Core inflation measures the change in costs for goods and services while leaving out volatile food and energy items. This gives economists a much clearer picture of underlying long-term price trends. What is a speculative stock? A speculative stock belongs to a company that usually has unproven products or very little revenue, but it offers the chance of huge gains alongside much higher risk. People buy them when they want to chase rapid growth. What is a credit score? A credit score is a three-digit number that reflects your creditworthiness based on your borrowing and repayment history. Lenders use it to decide whether to approve you for loans and what interest rates to offer. What is a depression? An economic depression is an extreme and extended downturn where business activity slows way down and joblessness stays very high for years. It is much more severe than a typical recession. How does fear affect markets? Fear causes investors to panic sell their assets, leading to sharp market drops and heightened volatility as everyone rushes for the exits. It is fascinating how human psychology can drive sudden price swings. What is crypto liquidity? Crypto liquidity refers to how easily a digital coin can be bought or sold in the market without causing wild price swings. High liquidity means lots of active traders and smooth transactions, which is super important for keeping things stable. What is decentralized finance? Decentralized finance relies on blockchain technology to offer traditional financial services like lending and trading without needing standard middlemen like banks. What is a payday loan? A payday loan is a short-term, high-interest advance meant to tide you over until your next paycheck. They usually come with steep fees, so it is best to use them only in absolute emergencies. What is a personal loan? A personal loan is a fixed amount of money you borrow from a bank or lender that you pay back in regular monthly installments over a set period. What is an option spread? An option spread is a trading strategy where you simultaneously buy and sell multiple options, contracts of the same class to limit your maximum risk and potential reward. It is a clever way to trade derivatives without exposing yourself to unlimited losses. What is a core portfolio? A core portfolio acts as the solid foundation of your investments, usually made up of dependable assets like broad market index funds designed for long-term growth. What is a consignor? A consignor is someone who agrees to take on the legal responsibility of paying back a loan if the main borrower stops making payments. Lenders often require one if the primary applicant has a weak credit history. What is a financial goal? A financial goal is a specific target you set for how you want to save, spend, or invest your money in the future. Having a clear objective helps you stay focused and gives your budgeting a real purpose. What is a bull market? A bull market happens when stock prices are rising consistently and investor confidence is running really high. It is a fun time for the community because overall financial sentiment is super positive. What is an effective tax rate? An effective tax rate is the actual percentage of your total income that you pay in taxes after taking into account deductions and credits. It usually ends up being lower than your top tax bracket. Does dividend capture really work? Dividend capture strategy involves buying a stock right before its payout date and selling it shortly after to grab the cash reward. While it sounds simple, the stock price usually drops by the dividend amount on the ex-dividend date, making it pretty tough to consistently beat the market after trading fees. What is the S&P 500? The S&P 500 is a major stock market index that tracks the performance of 500 of the biggest publicly traded companies in the United States. Should investors hold cash during a market crash? Holding some cash during a market crash gives you wonderful flexibility to buy amazing companies at a discount. It is all about having dry powder ready for when great opportunities pop up. What is market capitalization? Market capitalization is the total dollar value of a company's outstanding shares, calculated by multiplying the share price by the total number of shares. It is a quick way to see how large a business is in the market. What causes market crashes? Market crashes usually happen when sudden panic, economic troubles, or overvalued asset prices cause a massive wave of selling. Everyone tries to cash out at the same time, which drags overall prices down really fast. What are operating expenses? Operating expenses are the day-to-day costs. What is an out-of-the-money option? An out-of-the-money option is a contract that currently has no intrinsic value because the strike price is unfavorable compared to the current market price of the underlying asset. It would lose money if you exercised it right now, but traders often buy them cheaper for potential future movement. Why can options create large gains? Options can deliver huge returns because they use leverage, letting you control a large block of shares for a fraction of the cost. Even a small price movement in the underlying stock can result in massive percentage gains for the contract holder. What is an option spread? An option spread is a trading strategy where you buy and sell multiple options contracts at the same time to limit both your potential risk and profit. It is a neat way to trade without exposing yourself to unlimited losses. What is a bear put spread? A bear put spread involves buying a put option at a higher strike price, while simultaneously selling another put option at a lower strike price on the same asset. This setup helps reduce your upfront cost while betting on a moderate price decline. Why are stablecoins used? Stablecoins are digital currencies designed to keep a steady value, usually pegged to the US dollar, which helps traders avoid crypto market swings. They make it super easy to move funds around quickly without cashing out to a traditional bank. What is the options chain? An options chain is basically a complete list of all available call and put contracts for a specific stock, organized by expiration date and strike price. It gives traders a bird's eye view of all the pricing and volume details in one handy place. How can you negotiate a lower interest rate? You can negotiate a lower interest rate by calling your lender, highlighting your solid payment history, and mentioning competing offers from other banks to show you have better options. What causes inflation? Inflation usually happens when the demand for goods and services outpaces the supply, or when rising production costs push overall prices higher. What is a GIC? A GIC, or Guaranteed Investment Certificate, is a secure savings option where you lock in your money for a set period in exchange for a guaranteed return. What is good debt? Good debt is money you borrow for things that can help you grow your net worth or boost your earning potential over time, like a mortgage for a home or a loan for your education. What is mortgage amortization? Mortgage amortization is the schedule showing how your monthly payments are split between paying off the principal loan amount and covering the interest over time. What is the ask price for an option? The ask price is simply the lowest amount a seller is willing to accept for that particular options contract right now. What is customer lifetime value? Customer lifetime value measures the total revenue a business can reasonably expect from a single customer account throughout their entire relationship. company liabilities? Company liabilities are simply the financial debts or obligations a business owes to outside parties, like loans or accounts payable. What causes inflation? Inflation typically happens when the overall demand for products and services grows faster than the available supply, pushing prices up across the board. What percentage of income should go toward housing? A common rule of thumb is to aim for around 30% of your monthly income to cover housing costs. This helps ensure you still have plenty left over for savings and daily living expenses. How long does it take to build good credit? Building a solid credit history generally takes around a few years of consistent, on-time payments and smart debt management. Everyone's journey is a bit unique depending on where they're starting from. What is time value? Time value represents the extra money an options contract is worth beyond its current intrinsic value, mostly because there is still time left before it expires. What is a home equity line of credit? A home equity line of credit lets you borrow money using the built-up value of your house as collateral, giving you flexible funds for big expenses whenever you need them. What is options flow? Options flow is basically tracking large trades made by institutional investors, which can give us clues about where big money is moving in the market. What is a credit union? A credit union is a member-owned financial cooperative that offers similar services to a traditional bank, but usually with lower fees and better interest rates. What is a business model? A business model is basically the core strategy a company uses to make money and deliver value to its customers. What is theta? Theta measures how fast an option loses value as time ticks closer to its expiration date, which is super important for traders to watch. What is a high-interest savings account? A high-interest savings account is a special type of bank deposit account that pays a much higher percentage rate on your cash compared to standard accounts, helping your savings grow faster. What is the S&P 500? The S&P 500 is a major stock market index that tracks 500 of the largest publicly traded companies in the United States, giving us a great snapshot of how the overall market is doing. What is the biggest budgeting mistake people make? The most common slip-up is forgetting to plan for unexpected expenses, which can easily throw off even the best-laid plans. Keeping a little cash set aside for emergencies makes a huge difference. What are the stages of the business cycle? The business cycle moves through four distinct phases: expansion, peak, contraction, and trough. These stages describe the natural ups and downs of economic activity over time. What is the producer price index? The producer price index is an economic indicator that measures the average changes in selling prices received by domestic producers for their output. What is panic selling? Panic selling happens when investors suddenly sell off their shares in a rush due to fear, usually causing prices to drop even lower very quickly. Is investing early more important than investing more? Starting early usually gives your money more time to benefit from compound growth, which can sometimes matter even more than the initial amount. What is operating margin? Operating margin is a key profitability metric that shows what percentage of revenue is left over after paying for variable costs of production, like wages and raw materials. What is an annual fee? An annual fee is a yearly charge that some credit card companies or membership programs require you to pay just for having their services or perks active. What is economic growth? Economic growth is basically an increase in the production of goods and services in an economy over a specific period. It is usually measured by looking at changes in the gross domestic product. Should investors buy during a recession? Recessions can actually offer great long-term buying opportunities for investors, since solid companies often go on sale. But it is always smart to keep a cash cushion for safety first. What is the FIRE movement? The FIRE movement stands for financial independence, retire early, which is all about saving aggressively and living frugally to leave the traditional workforce way ahead of schedule. What makes a savings account attractive? Savings accounts are super appealing because they offer a safe place to keep your cash while earning a little bit of interest over time. What is an expiration date? An expiration date is the final day that a product, like food or medicine, is guaranteed to be at its peak quality and safety by the manufacturer. What is a covered call? Covered call is an option strategy where you hold shares of a stock and sell call options on those same shares to generate extra income. It is a pretty neat way to make a little extra cash while you wait. What causes credit contraction? Credit contraction happens when lenders tighten their lending standards and make it much harder for people and businesses to borrow money. This usually slows down spending and cools off the overall economy pretty quickly. How much should you keep in your checking account? It is usually best to keep about 1 to 2 months of living expenses in your checking account to handle everyday bills smoothly. What is liquidity risk? Liquidity risk happens when you need cash in a hurry, but cannot sell your assets quickly without taking a big price cut. What is a secured credit card? A secured credit card requires a cash deposit up front that acts as your credit limit, which makes it a fantastic tool for building or repairing your credit history safely. What is the price-to-earnings ratio? The price-to-earnings ratio is a helpful valuation metric that compares a company's share price to its per-share earnings. It basically shows how much investors are willing to pay for every dollar of the company's profits. What is the FIRE movement? That's super interesting. Tell me more about it. What is tangible book value? Tangible book value is a metric that looks at a company's physical net worth by taking its total assets, subtracting intangible assets like patents and goodwill, and then subtracting all liabilities. What is angel investing? Angel investing is when wealthy individuals provide capital to early-stage startups in exchange for ownership equity or convertible debt. What is a soft credit inquiry? A soft credit inquiry is simply a background check on your credit report that does not impact your credit score at all. Can someone save 50% of their income? Saving half of your income is definitely possible, but it takes a lot of budgeting and dedication. Most people start by cutting back on non-essential spending to reach such an ambitious goal. How do bank overdraft fees work? A bank overdraft fee is charged when you spend more money than you actually have in your checking account, and the bank covers the difference for you. What causes ETF overlap? ETF overlap happens when two different exchange-traded funds hold some of the exact same underlying stocks or assets in their portfolios. It means you might accidentally be doubling up on certain companies, even if you think you are diversifying. What is investor sentiment? Investor sentiment is basically the overall mood or attitude of market participants toward a specific stock or the entire financial market. It shows whether people are feeling optimistic or pessimistic about where prices are heading. What is the maximum loss on a short position? When you short a stock, your potential loss is actually limitless since a company's share price can keep rising indefinitely. That is why risk management is so crucial when trading. What is a startup valuation? A startup valuation is basically the process of determining the financial worth of an early-stage company before it has established a long-term track record of profits. What is liquidity risk? Liquidity risk happens when you need cash quickly, but cannot sell your investments fast enough without taking a big hit to the price. It is definitely something to keep in mind when picking where to put your money. How much does someone need for fire? The FIRE movement usually suggests saving about 25 times your annual living expenses to retire comfortably. It really all depends on your personal lifestyle and spending habits. What is a TFSA? A TFSA is a registered account that lets your investments grow completely tax-free, and you can withdraw your money anytime without paying taxes on the gains. What is historical volatility? Historical volatility looks at how much a stock's price has bounced around in the past over a specific time frame. It helps traders gauge how wild the price swings might get going forward. Why does inflation matter to investors? Inflation eats away at your purchasing power over time, meaning the money you save today will buy you less in the future. That is why investors look for returns that can beat the rate of inflation to keep their wealth growing. Why do longer loans cost more? Longer loans accumulate more interest over time because the borrowed money sits with you for a much extended period. That is why keeping the loan term as short as you can comfortably afford saves you a lot of cash. What is a market crash? A market crash happens when stock prices drop suddenly and sharply across the board due to widespread panic or economic panic. It can definitely be a stressful time to watch the charts, but it is a normal part of how cycles work. What is a momentum stock? A momentum stock is a company whose share price is rapidly climbing because strong buying interest is already pushing it higher and higher. Traders love riding these upward waves to catch quick gains while the trend is hot. What is a good net worth for your age? Net worth varies a ton depending on your career stage and background, so there is really no single magic number. The most important thing is simply making sure your assets are growing faster than your debts over time. What is private equity? Private equity involves investing directly in private companies or buying out public ones to take them private. These funds typically work behind the scenes to restructure businesses and boost their value before selling them down the road. What causes impulse purchases? Impulse buys usually happen when emotions take over and bypass our rational budgeting plans. Clever store displays and limited time offers make it way too easy to grab things on a whim. When might a trader use a straddle? A trader usually uses a straddle option strategy when they expect a massive price move in either direction, but they are not sure which way it will break. It involves buying a call and a put at the same strike price. What is quantitative easing? Quantitative easing is a central bank policy where they purchase government bonds to inject fresh money into the financial system and encourage lending. It is basically a tool used to boost economic activity when standard interest rates are already super low. Here is the JSON requested. What is a margin of safety? A margin of safety is the cushion between a company's actual sales and its break-even point, which helps protect investors from unexpected downturns. It is essentially buying an asset well below its estimated true value to minimize your potential risk if things go wrong. What risks does a cosigner take? When you cosign a loan, you are legally agreeing to pay it off if the primary borrower stops making payments. This means your own credit score and financial standing are directly on the line. Why do companies go public? Companies usually decide to go public so they can raise a significant amount of capital from everyday investors to fund future expansion and research. It also gives the original founders and early backers a chance to cash out some of their hard-earned equity. What triggers a margin call? A A margin call happens when the value of your borrowed investments drops too low, forcing your broker to demand extra funds or cash right away. It is definitely a stressful situation that reminds us why managing risk is so important. What is a debt-free lifestyle? Living debt-free means completely avoiding loans and credit card balances so that every single dollar you earn stays entirely in your own pockets. It brings incredible peace of mind because you never have to worry about monthly interest payments hanging over your head. What is an emerging markets ETF? An emerging markets ETF is a fund that tracks stocks in developing countries with fast-growing economies. It is a neat way to diversify your portfolio globally and tap into new growth opportunities. What is an IPO? An IPO, or initial public offering, is the exciting moment when a private business first sells its shares to the public. It transforms a private enterprise into a publicly traded one so they can unlock major funds for growth. What is a vertical spread? A vertical spread involves trading options by simultaneously buying and selling contracts of the same expiration date, but at different strike prices. It helps limit both your potential risk and your maximum reward right from the start. What is a trading edge? A trading edge is a distinct advantage or strategy that gives you a higher statistical chance of winning over the long run. It is essentially what helps successful traders consistently pull ahead of the market. What is active investing? Active investing involves constantly buying and selling assets like stocks to try and beat the overall market performance. It takes a lot of research, time, and attention compared to just setting up a passive index fund. What is ESG investing? ESG investing focuses on putting your money into companies that champion positive environmental practices, social responsibility, and strong corporate governance. It is a fantastic way to align your portfolio with your personal values while still aiming for solid financial returns. What is a 0 days to expiration option? A 0 days to expiration option is a contract that expires on the exact same day it is traded, offering fast-paced action for savvy traders. It definitely adds a lot of excitement to the session. And buy now, pay later plans risky. Buy now, pay later plans can definitely sneak up on you if you lose track of multiple small balances. It is super important to keep an eye on them so you do not accidentally overspend your budget. How does quantitative tightening affect markets? Quantitative tightening happens when a central bank reduces its balance sheet by selling off assets or letting bonds mature, which drains liquidity from the financial system. That process tends to put upward pressure on interest rates and can create a bit of a headwind for asset prices. What is private equity? Private equity involves investing funds directly into private companies or buying out public ones to take them private. It is a neat way to help businesses restructure and grow away from the public eye. How many credit cards should someone have? Most people do fine managing between 1 and 3 credit cards to cover different rewards and expenses. Keeping the number low really helps you stay organized and avoid accidental overspending. What is initial margin? Initial margin is the collateral you need to deposit with your broker before you can open a leveraged trading position. It acts as a good faith deposit to cover potential losses on your trades. What is inflation protection? Inflation protection involves using specific assets like Treasury inflation-protected securities or commodities to shield your purchasing power from rising prices. It is a smart way to help keep your wealth from losing value over time. What is the difference between credit and debit? The main difference between credit and debit is that credit allows you to borrow money to make a purchase, while debit uses your own money from your account, so you're not taking on any debt. is a distributing ETF? A distributing ETF is a fund that pays out the dividends or interest collected from its underlying holdings directly to you as cash, rather than reinvesting them back into the fund. It is a super convenient way to generate regular income from your investments. What is an ex-dividend date? An ex-dividend date is the cutoff day that determines whether you are entitled to receive the upcoming dividend payout from a company. If you purchase the stock on or after that day, the previous owner gets the cash reward instead. What is a high-interest savings account? A high-interest savings account offers a much better annual percentage yield than standard accounts, helping your cash grow faster over time. It is a fantastic place to keep your emergency fund safe while earning some extra interest. What is long-term investing? Long-term investing is all about holding onto your assets for years or even decades to let compound growth work its magic. It is a fantastic strategy because it helps you ride out short-term market bumps and focus on your future financial goals. What are the stages of a market cycle? A market cycle moves through 4 distinct phases, including accumulation, markup, distribution, and markdown. These stages describe how asset prices transition from being undervalued during quiet periods all the way to overvalued before a correction hits. Which is gamma measure? Gamma tracks how fast an option's delta changes when the underlying stock price shifts. It helps traders see how stable their directional exposure is as the market moves. How are investment gains taxed? Investment gains are typically taxed as capital gains, with different rates depending on how long you held the asset before selling. What is sequence of returns risk? Sequence of returns risk is the danger of facing poor market returns right when you retire and start withdrawing money. It can really drain your savings faster than expected compared to hitting a rough patch earlier in your career. What is a balanced fund? A balanced fund is an investment portfolio that holds a mix of both stocks and bonds to give you a blend of growth and stability. It is a wonderful way to diversify your savings without having to manage separate funds yourself. How can you improve your credit score? You can boost your credit score by always paying your bills on time and keeping your credit card balances nice and low. Regularly checking your credit report for any errors is also a super smart habit to build. What is a 401k? A 401k is a retirement account sponsored by your employer that lets you save a portion of your paycheck before taxes are taken out. It is a brilliant way to build up your nest egg over time, especially if your job offers a matching contribution. How does FOMO affect investors? FOMO often drives people to jump into hot trends. Why does implied volatility rise before earnings? Implied volatility tends to climb right before an earnings report because investors expect a massive price swing once the company releases its numbers. That uncertainty makes option contracts more valuable since everyone is bracing for a big surprise. What is options volume? Options volume simply counts the total number of contracts that have been traded during a specific trading session. It is a fantastic way to see how much market interest and liquidity there is for a particular stock. Why do central banks raise interest rates? Central banks raise interest rates to cool down high inflation and help stabilize the overall economy. When borrowing costs go up, it tends to slow down spending and borrowing, which keeps prices from rising too fast. What is socially responsible investing? Socially responsible investing is a strategy where you put your money into companies that align with your personal values, like supporting environmental protection or ethical corporate governance. It is a wonderful way to grow your wealth while also making a positive impact on the world. Why does Bitcoin have a limited supply? Bitcoin has a hard cap of 21 million coins encoded right into its software to create digital scarcity. That limited supply helps prevent inflation from unchecked coin creation, making it function a bit like digital gold. What makes a business recession resistant? Recession-resistant businesses provide essential goods and services like groceries, healthcare, and utilities that people need no matter how the economy is doing. Because their demand stays steady even in tough times, these companies tend to weather downturns much better than others. What is return on assets? Return on assets is a handy metric that shows how efficiently a company turns its investments into actual profit. It is calculated by dividing net income by total assets. What is a non-performing loan? A non-performing loan is a credit agreement where the borrower has stopped making scheduled payments of interest or principal for a prolonged period, usually 90 days or more. Banks keep a close eye on these because they can signal financial trouble ahead. What is yield chasing? Yield chasing is when investors hunt around for the absolute highest payouts available, often jumping into riskier assets just to get a bigger return. It can be super tempting, but those extra high yields usually come with a lot more danger attached. What are alternative investments? Alternative investments are asset classes that go beyond traditional stocks and bonds, such as real estate, commodities, or art. They offer a great way to diversify your portfolio and find growth opportunities in unique places. Why do people get trapped in minimum payments? Minimum payments trap people because they mostly just cover the interest charges rather than paying down the actual debt. This causes balances to linger for years, making purchases end up costing way more over time. What is accounts receivable? Accounts receivable represents the money that customers owe a company for products or services they already received on credit. Businesses track this as a current asset because they expect to collect those funds in the near future. Why does Bitcoin have a limited supply? Bitcoin has a strict cap of 21 million coins built directly into its code to create artificial scarcity. This capped limit protects against uncontrolled inflation, giving it qualities similar to digital gold. What is investor sentiment? Investor sentiment is the overall mood or attitude of market participants toward a particular asset or the stock market as a whole. When everyone feels optimistic, prices tend to rise, but fear can quickly lead to a sudden market downturn. How much should you keep in your checking account? It is usually smart to keep about 1 to 2 months' worth of living expenses in your checking account to handle everyday bills and avoid overdraft fees easily. What are durable goods? Durable goods are long-lasting products like appliances or cars that are built to last for several years. Because people can hold off on buying them when times get tough, watching their sales gives us a great read on consumer confidence. What is an inverted yield curve? An inverted yield curve happens when short-term bonds pay higher interest than long-term ones. It is often watched closely because it has historically been a reliable warning sign for an upcoming economic recession. What is a personal loan? A personal loan is a specific amount of money you borrow from a bank or lender that you pay back in fixed monthly installments over a set period. People often use them to cover big expenses or consolidate other debts into one single payment. What is yield chasing? That's super interesting. Tell me more about it. What is tokenization? Tokenization turns real-world assets like art or real estate into digital tokens on a blockchain. It makes buying and selling fractional shares of big items much easier and faster. How much cash is too much cash? Keeping too much cash in a low-interest checking account can actually hurt you because inflation slowly reduces its purchasing power over time. It is usually much better to invest extra funds or put them in a high-yield savings account where they can grow. What is a bear market? A bear market happens when stock prices drop by 20% or more from recent highs due to widespread pessimism. It is a totally normal part of the economic cycle, even though watching those numbers dip can feel a bit discouraging. What is an IPO? An IPO, or initial public offering, is when a private company first offers its shares to the public on a stock exchange. It is a huge milestone because it allows everyday people to finally buy in and become part owners. What is Bitcoin? Bitcoin is a digital currency that uses cryptography for security and operates without a central bank or government. Transactions are recorded on a public ledger called a blockchain, making it completely decentralized. Why is automatic saving effective? Automatic saving works so well because it takes the decision-making process completely out of your hands, meaning the money moves straight to your savings before you even have a chance to spend it. What is alpha? Alpha is a term investors use to describe an investment strategy's ability to beat the broader market average. Basically, it represents the extra returns you get compared to a standard market index. What is angel investing? Angel investing is when wealthy individuals provide early-stage funding to start-up companies in exchange for ownership equity. It is a risky move, but it gives new businesses the capital they need to get off the ground. What is a trading strategy? A trading strategy is simply a systematic plan that guides when you buy and sell assets to reach your financial goals. It helps keep emotions out of the picture so you can stick to a clear and consistent game plan. What is position sizing? Position sizing is all about figuring out how much of your total money to put into a single trade to manage risk. It helps you avoid losing too much if the market suddenly turns against you. What is a dividend stock? A dividend stock is a share in a company that regularly distributes a portion of its profits back to shareholders. It is a fantastic way to earn a steady stream of passive income while you hold on to your investment. Why does net worth matter? Your net worth is basically your financial health score, calculated by taking everything you own and subtracting what you owe. It gives you a clear snapshot of your overall progress and helps guide your long-term goals. What is stagflation? Stagflation happens when an economy deals with stagnant growth, high unemployment, and rising prices all at the exact same time. It is a tricky situation because the usual fixes tend to make one of those problems even worse. What is revenue? Revenue is the total amount of money a business brings in from selling its goods or services before any expenses are subtracted. It is basically the top line on an income statement that shows how much money is flowing into the company. How does issuing shares dilute investors? When a company issues new shares, the total number of available pieces increases, which means each existing shareholder now owns a slightly smaller percentage of the overall business. It is essentially slicing the same pie into more pieces, so every individual slice represents a lesser share of the whole. What is a 401k? A 401k is a special retirement account set up by your employer that lets you save a portion of your paycheck before taxes are taken out. Many companies even match a part of what you put in, which is basically free money for your future. What is a depression? An economic depression is a severe and prolonged downturn in economic activity, much worse than a typical recession, marked by massive unemployment and drastically reduced business output. What are company liabilities? Liabilities are basically all the debts and financial obligations a business owes to outside parties, like loans or unpaid bills. They show up right on the balance sheet to give a full picture of what the company owes. What is a quality stock? A quality stock generally belongs to a financially strong company with steady earnings, low debt, and a proven track record of weathering market storms. These reliable businesses usually offer solid management and consistent growth over the long haul. What happens when collateral is repossessed? When collateral is repossessed, the lender takes back the property you used to secure a loan because payments stopped. They usually sell it to help cover the remaining debt you owe. How does home equity build? Home equity grows naturally over time as you make your monthly mortgage payments, which slowly chips away at the principal balance you borrowed. Plus, if the overall property value in your neighborhood increases, your ownership stake gets an extra boost. What is a stock exchange? A stock exchange is essentially an organized marketplace where buyers and sellers come together to trade shares of publicly held companies. It provides a secure and regulated environment to make those transactions happen smoothly. What is a cyclical stock? A cyclical stock is a share in a company whose performance tends to rise and fall right along with the overall health of the economy. These businesses usually belong to industries like travel, automotive, or luxury goods that people spend more on when times are good. What is risk capacity? Risk capacity is basically how much financial loss your portfolio can handle before it actually impacts your essential lifestyle needs. It depends heavily on factors like your timeline, income stability, and overall wealth. How does psychology affect financial decisions? Emotions like fear and excitement often drive people to make impulsive buying or selling choices instead of sticking to a logical plan. Being aware of those mental traps helps you stay calm and make much better choices with your money. What is bankruptcy? Bankruptcy is a legal process for individuals or businesses that cannot pay their debts, allowing them to either wipe out what they owe or create a structured repayment plan under court supervision. Should an emergency fund be invested? An emergency fund should definitely be kept in a safe, liquid place like a high-yield savings account rather than being invested in the stock market. That way, your cash is completely secure and ready for you whenever an unexpected expense pops up. What is passive investing? Passive investing is a strategy where you buy a broad market index fund and hold on to it for the long haul, rather than constantly trading individual shares. It keeps things simple and helps minimize your trading fees over time. What is a cosigner? A cosigner is someone who legally agrees to take on the responsibility of paying back your loan if you happen to miss payments. Lenders usually require one if your credit history or income needs an extra boost to qualify. Why do meme stocks become popular? Meme stocks usually blow up because online communities band together to hype them across social media, sparking a massive wave of viral trading excitement. What is a personal loan? A personal loan is an unsecured amount of money you borrow from a bank or lender that you pay back in fixed monthly installments over a set period. What are alternative investments? Alternative investments are non-traditional asset classes like real estate, commodities, or fine art that do not fall into standard categories such as stocks or cash. They can add fantastic diversification to a portfolio. Why do companies pay dividends? Companies share a portion of their earnings as dividends to reward shareholders for investing in them and to show the business is financially healthy. What is an ETF expense ratio? An ETF expense ratio is simply the annual fee charged by the fund manager to cover operational and management costs. It is deducted directly from the fund's assets, so it quietly influences your overall returns over time. What is blockchain technology? Blockchain is essentially a decentralized digital ledger that securely records transactions across a network of computers. Because every block is linked and encrypted, it makes tampering with the data virtually impossible. What is the debt snowball method? The debt snowball method is a repayment strategy where you pay off your smallest debts first to build momentum before tackling the bigger ones. What is a seed phrase? A seed phrase is a sequence of random words generated by your crypto wallet that acts as your ultimate master backup key. You definitely want to keep it private and stored securely offline so nobody else can ever access your digital assets. What is EBITDA? EBITDA stands for earnings before interest, taxes, depreciation, and amortization, which helps measure a company's overall financial performance. It gives investors a clearer picture of core profitability without factoring in financing or accounting decisions. What is unusual options activity? Unusual options activity happens when there is a sudden, massive surge in options trading volume for a specific stock compared to its usual daily average. Traders often watch for this because it can signal that big institutional investors are betting on a major upcoming price move. What is factor investing? Factor investing is a strategy where you target specific drivers of returns, like value or momentum, to try and boost your portfolio performance. What does owning a stock mean? Owning a stock means you actually hold a tiny piece of that company, making you a proud shareholder. You get to share in their future success and growth as the business expands. What is gamma? Gamma measures how fast an option's delta changes when the underlying stock price moves. It basically helps traders understand how sensitive their position's momentum is to sudden market shifts. What is a trading edge? A trading edge is simply a unique advantage or strategy that gives you a better statistical chance of winning trades over the long run. It helps separate disciplined traders from just guessing in the market. How does a stock exchange work? Think of a stock exchange as a giant digital marketplace where buyers and sellers come together to trade shares easily. It acts like an auction house that matches trades in real time, so everyone gets a fair price. What is the FIRE movement? The FIRE movement stands for Financial Independence, Retire Early, which is a lifestyle strategy focused on extreme saving and investing, so you can leave the traditional workforce decades ahead of schedule. What is an installment payday loan? An installment payday loan lets you borrow cash and pay it back in smaller scheduled amounts over time, though they usually come with very high interest rates and fees. How does quantitative tightening affect markets? Quantitative tightening happens when central banks reduce their balance sheets, which usually pulls liquidity out of the financial system and can put downward pressure on asset prices. Are dividends free money? Dividends are a portion of a company's earnings paid out to shareholders. So while they aren't completely free, they are a fantastic bonus for being an investor. What is a rate hike? A rate hike happens when a central bank raises its benchmark interest rate to help slow down inflation and cool off the economy. It makes borrowing more expensive for everyone. What is a lagging indicator? A A lagging indicator is a metric that changes after the overall economic trend has already shifted, helping analysts confirm long-term patterns rather than predicting future ones. What is hyperinflation? Hyperinflation is an extremely rapid and out-of-control surge in prices that completely destroys the purchasing power of a currency. It usually happens when a government prints too much money to cover its debts. What is diversification? Diversification is like not putting all your eggs in one basket by spreading your investments across different assets to lower your overall risk. Which assets tend to perform poorly during inflation? When inflation heats up, fixed income assets like traditional bonds usually struggle since rising prices erode their future purchasing power. Why does inflation matter to investors? Inflation really matters because rising prices can seriously eat away at your purchasing power over time. That is why people look for investments that can outpace inflation so their hard-earned money keeps growing. What is a recession? A recession is basically a significant decline in general economic activity that lasts for more than a few months, usually seen across the whole economy. During this time, things like employment, production, and retail sales tend to drop. Why is liquidity important? Liquidity is super important because it means you can easily turn your assets into cash whenever you need it without losing value. Having that flexibility gives you great peace of mind for unexpected expenses. Why do markets recover after crashes? Markets bounce back after crashes because smart investors and institutions step in to buy up great companies at a major discount when prices drop. Plus, economies naturally adapt and grow over time as businesses innovate and find new ways to succeed. What is a blue chip stock? A blue chip stock is a share in a massive, financially stable company with a long history of reliable performance. They are usually industry leaders that weather economic storms really well. What is standard deviation? Standard deviation measures how much the price of an investment bounces around compared to its average. A higher number usually means the asset is more volatile and carries more risk. What is unemployment? Unemployment is the percentage of the workforce that is actively looking for a job, but currently jobless. It is a key metric economists watch to see how healthy the labor market is. Why are stablecoins used? Stablecoins are digital currencies designed to keep a steady value, usually pegged to the US dollar, which helps traders avoid crypto market swings. They make it super easy to move funds around quickly without worrying about sudden price drops. What is dilution? Dilution happens when a company issues new shares, which reduces the ownership percentage of existing shareholders. What is a bank run? A bank run happens when a huge crowd of depositors suddenly rushes to withdraw their money all at once because they are worried the bank might run out of cash. It usually creates a major panic and can actually cause the institution to collapse. Why did housing prices fall? Housing prices usually drop when mortgage interest rates go up or when there is an oversupply of homes on the market. When borrowing gets too expensive, fewer buyers can afford to purchase, which drives prices down. What is an emerging markets ETF? An emerging markets ETF is an exchange-traded fund that invests in companies located in developing countries experiencing rapid economic growth. It is a neat way to diversify your portfolio internationally, though it can come with a bit more volatility. What is a credit bureau? A credit bureau is an agency that collects your financial data and payment history to build your credit report and score. Lenders use that information to decide if they want to approve you for loans or credit cards. What is inventory turnover? Inventory turnover is a metric that shows how many times a business sells and replaces its stock of goods over a specific period. A higher ratio usually means the company is doing a fantastic job moving its products quickly. What is a life cycle fund? A life cycle fund is an investment portfolio that automatically adjusts its asset mix to become more conservative as you approach a specific target date. What is a business model? A business model is basically the master plan a company uses to make money and sustain itself. It outlines how they create value for customers, what they sell, and how they turn a profit. Why are zero DTE options risky? Zero-day to expiration options are super risky because they expire on the exact same day they are traded, leaving almost zero time for the market to recover if the trade goes south. That lightning-fast timeline can lead to massive losses just as quickly as big gains. What does a central bank do? A central bank manages a country's money supply, sets interest rates, and oversees commercial banks to keep the financial system stable. It plays a huge role in controlling inflation and guiding national monetary policy. How can you improve your debt-to-income ratio? You can boost your debt-to-income ratio by paying down existing balances or by finding ways to grow your monthly earnings. Lenders love seeing a lower percentage because it proves you can comfortably manage your financial obligations. Is dividend investing better than growth investing? Dividend investing focuses on getting steady cash payouts from mature companies, whereas growth investing targets fast expanding businesses that reinvest their profits for capital gains. Neither is strictly better since it all depends on whether you prefer regular income or long-term price appreciation. What is a mortgage stress test? A mortgage stress test is an evaluation lenders use to see if you could still afford your loan payments if interest rates were to climb higher. It acts as a safety cushion to ensure you do not get overwhelmed financially if economic conditions change. What is synthetic ETF exposure? Synthetic ETF exposure is when a fund uses financial derivatives like swaps rather than buying the actual underlying securities to track an index. It is a clever approach that can sometimes lower costs or improve tracking accuracy, though it introduces a different layer of counterparty risk. What is intrinsic value? Intrinsic value is the true, calculated worth of an asset based on its fundamentals, which might be totally different from its current market price. Investors use it to figure out if a company is actually a bargain or overpriced. What is market maker hedging? Market maker hedging happens when financial firms take offsetting positions to protect themselves from sudden price swings as they facilitate trades. It helps them manage risks smoothly behind the scenes. Why does the debt snowball help motivation? The debt snowball method boosts motivation because knocking out your smallest balances first gives you quick wins and early success. Seeing those accounts completely disappear builds incredible momentum to keep tackling the bigger debts. How can someone become debt-free faster? Accelerating your journey out of debt usually comes down to making extra principal payments and cutting discretionary spending to free up more cash. Every little bit you add above the minimum requirement chips away at the principal balance much faster. Why is payment history important? Payment history matters because lenders look closely at your track record of paying bills on time to decide if you are a reliable borrower. It is actually the biggest factor influencing your overall credit score. What is a gamma squeeze? A gamma squeeze happens when a massive wave of call option buying forces market makers to purchase the underlying stock rapidly to stay hedged, which sends the price rocketing upward. It creates a wild chain reaction in the market. What is vacancy rate? Vacancy rate is simply the percentage of unoccupied rental units in a specific area compared to the total available properties. Landlords and investors watch this closely to gauge local housing demand and rental market health. What is buying power? Buying power is basically the amount of money you have available to trade securities after factoring in your cash and any margin you are allowed to use. It tells you right away how much firepower you have ready to make a move in your account. What is a quality stock? A quality stock generally belongs to a financially strong company with steady earnings, low debt, and a solid reputation in its industry. These reliable businesses tend to weather market downturns much better and reward long-term investors with consistent growth. What is customer lifetime value? Customer lifetime value estimates the total revenue a business can expect from a single customer throughout their entire relationship. It helps companies figure out how much they should spend to acquire new buyers. What is the S&P 500? The S&P 500 is a major stock market index that tracks 500 of the largest publicly traded companies in the United States. It is widely considered one of the best gauges of overall stock market performance. How can you measure ETF diversification? ETF diversification is measured by looking at how spread out its holdings are across different sectors, industries, and company sizes. Checking the fund's top 10 holdings and index concentration helps you see if it leans too heavily on just a few assets. Why can profitable companies run out of cash? Profitable companies can still run out of cash if their money is tied up in unpaid customer invoices or unsold inventory rather than liquid funds. This happens because accounting profit does not always match actual cash currently sitting in the bank. What is business cash flow? Business cash flow tracks the total money flowing in and out of a company over a specific period. It ensures the business has enough liquid funds on hand to pay bills and keep operations running smoothly. What are the risks of debt consolidation? Debt consolidation can sometimes stretch out your repayment timeline, which might lead to paying more total interest over time. Plus, if underlying spending habits do not change, It is easy to rack up new balances on those freshly cleared cards. What is a financial sector ETF? A financial sector ETF is an investment fund that holds shares of banks, insurance companies, and other financial institutions. It lets you easily invest in the whole financial industry at once instead of picking single bank stocks. What are the risks of real estate leverage? Using borrowed money to buy property can amplify your returns if property values rise, but it also magnifies your losses if the market dips. Plus, you still have to cover your mortgage payments even if the rental income drops. What is investment time horizon? An investment time horizon is simply the total length of time you plan to keep your money parked in an asset before needing to withdraw it. Knowing this helps you pick the right mix of risk and stability for your goals. What is financial risk? Financial risk refers to the chance that you might lose money or fail to get the returns you expected on an investment. It is just part of the deal whenever you put your funds into markets or new ventures. What is EBIT? EBIT stands for earnings before interest and taxes, measuring a company's profitability from its core operations by leaving out financing costs and tax expenses. What does a low PE mean? A low price-to-earnings ratio usually suggests that a company's stock might be undervalued, or that the market expects slower growth ahead compared to its peers. What is socially responsible investing? Socially responsible investing is a strategy where you put your money into companies that make a positive impact on the environment and society. It lets you support businesses that align with your personal values while still aiming for financial growth. Why is the 60/40 portfolio popular? The 60/40 portfolio is popular because it balances growth stocks with steady bonds to help smooth out market bumps. It gives investors a reliable mix of stability and potential gains. Why does the yield curve matter? The yield curve matters because it helps economists and investors gauge the overall health of the economy and anticipate potential recessions. What is gamma? Gamma is a metric that measures how fast an option's delta changes when the underlying stock price moves. It helps traders figure out how stable their risk exposure is. What is overdraft protection? Overdraft protection is a handy bank service that links your checking account to a savings account or a line of credit to prevent payments from bouncing if your balance hits zero. Are buy now pay later plans risky? Buy now pay later plans can definitely sneak up on you if you lose track of the payments. They make spending super easy, but accumulating multiple installment balances can lead to unexpected budget stress. What is discounted cash flow analysis? Discounted cash flow analysis is a method used to estimate the value of an investment by predicting its future cash flows and discounting them back to today's value. How do you calculate savings rate? You can figure out your savings rate by dividing the amount of money you set aside each month by your total income, and then turning that decimal into a percentage. It is a super helpful way to see how much of your earnings you are actually keeping for the future. How does a mortgage work? A mortgage is basically a specialized home loan you get from a lender to help buy property, which you pay back in monthly installments over many years. Why do banks pay interest on deposits? Banks pay interest on the money you keep with them because they use a portion of those funds to issue loans to other customers, sharing a slice of the profit they earn back with you. What expenses qualify as emergencies? Emergency expenses are truly unexpected and urgent costs, like sudden medical bills, critical car repairs, or essential home maintenance you just cannot put off. What is bid-ask spread? The bid-ask spread is simply the difference between the highest price a buyer is willing to pay and the lowest price a seller is willing to accept for an asset. How do you calculate net worth? You can figure out your net worth by adding up everything you own of value, like cash and property, and subtracting all of your current debts and liabilities. What is ETF tracking error? ETF tracking error measures how much a fund's performance wanders away from the actual index it is designed to follow. A lower number means the fund is doing a fantastic job mirroring its target market. What is GDP? Gross domestic product measures the total monetary value of all finished goods and services produced within a country during a specific time period. It is basically the ultimate report card for checking the overall health of an economy. What is debt-to-income ratio? Your debt-to-income ratio is simply the percentage of your monthly gross income that goes toward paying off your various debts and loans. Lenders look at this number to figure out how well you manage your monthly payments. What is momentum investing? Momentum investing is a strategy where traders buy assets that have been showing high price increases and sell those performing poorly, hoping the current market trends will keep running. What is equal weight investing? Equal weight investing is a strategy where you put the exact same dollar amount into every single company in a portfolio, regardless of how big or small the business is. Why do central banks raise interest rates? Central banks increase interest rates primarily to slow down rising inflation and cool off an overheating economy by making borrowing much more expensive. What is hyperinflation? Hyperinflation is an extremely rapid and out-of-control surge in prices that completely destroys the purchasing power of a country's currency. It usually happens when governments print way too much money to cover their debts. What is refinancing? Refinancing means replacing your current loan with a brand new one, usually to grab a lower interest rate or better repayment terms. It is a super smart way to lower your monthly payments. What happens when a company suspends its dividend? When a business pauses its dividend payouts, it means shareholders will temporarily stop receiving those regular cash distributions. Companies usually do this to keep cash in-house during tough times or to fund fresh growth projects. When might a trader use a strangle? A trader usually sets up a strangle by buying both a call and a put option with different strike prices when they expect a massive price swing, but are unsure which direction the market will break. How are stock market indexes created? Stock market indexes are built by selecting a specific group of leading companies and tracking their overall market performance together as a single benchmark. What is a stop limit order? A stop limit order tells your broker to buy or sell a stock only after it hits a specific trigger price, but it executes with a limit on the worst price you are willing to accept. What is sector rotation? Sector rotation is an active investment strategy where money is shifted from one industry group to another depending on the current phase of the economic cycle. It helps investors chase growth during booms or seek safety during downturns. What is momentum investing? Momentum investing is all about jumping into assets that are already climbing rapidly and riding that upward wave. Traders using this approach hope the strong market energy will stick around a bit longer. Why do companies go bankrupt? Companies usually file for bankruptcy when they run out of cash and simply cannot keep up with their debts or ongoing operating costs. It is definitely a tough situation for any business to face. Why does the debt snowball help motivation? The debt snowball method boosts motivation by having you knock out your smallest debts first for quick wins. Seeing those balances disappear completely gives you a massive psychological lift to keep going. What is a rate hike? A rate hike happens when a central bank raises. What is a microcap stock? A microcap stock refers to a publicly traded company with a very small total market value, usually under $300 million. These smaller equities can offer huge growth potential, but they also come with much higher risks and price swings. What is economic overheating? Economic overheating happens when an economy grows at an unsustainable pace, leading to rising inflation and supply shortages as demand outpaces production capacity. How can you measure ETF diversification? You can measure ETF diversification by looking at its underlying holdings, asset classes, and the weight of each individual company in the fund. Checking those sector allocations also helps you see if your investments are spread out nicely across different industries. Are dividends free money? Dividends are actually a portion of a company's profits shared with its shareholders, not quite free money. They come directly from the business's earnings as a reward for holding their shares. Does dividend capture really work? Dividend capture is a trading strategy where someone buys a stock right before its ex-dividend date to grab the payout and then sells it shortly after. While it sounds simple, the stock price usually drops by about the dividend amount on that date, which makes it harder to turn a guaranteed profit once fees and taxes are factored in. Why does time horizon matter? Your time horizon dictates how much risk you can comfortably take on, because a longer timeline gives your investments more room to bounce back from market drops. How does fear affect markets? Fear can cause sudden market sell-offs as anxious investors rush to protect their money and cash out. It often leads to sharp price drops driven by panic rather than actual company performance. What is needs versus wants? Needs are essential items like food and housing that you truly require to survive, while wants are fun extras like dining out or gaming gear that make life enjoyable, but aren't strictly necessary. What is a variable rate mortgage? A variable rate mortgage is a home loan where the interest rate can change periodically based on overall market conditions, meaning your monthly payments might go up or down over time. How is GDP calculated? Gross domestic product is figured out by adding up total consumer spending, business investments, government spending, and net exports. It gives us a clear picture of the overall economic health and total output of our country. What is stagflation? Stagflation happens when an economy deals with sluggish growth, high unemployment, and rising prices all at the exact same time. It is a tricky scenario because the usual fixes for inflation can end up hurting job growth even more. What is a rate cut? A rate cut is when the central bank lowers its main interest rate to make borrowing cheaper and encourage people to spend and invest more. What is a hard credit inquiry? A hard credit check happens when a lender thoroughly reviews your credit report because you applied for a new loan or credit card, which can temporarily lower your score a bit. What happens when a company suspends its dividend? When a firm pauses its payout, it usually means management wants to keep cash inside the business to protect its financial health, instead of sending it out to investors. That news can often cause the share price to drop, because people count on that regular income. How do you check your credit report? You can request your free credit reports online through official government-authorized websites to review your financial history and make sure everything looks accurate. What is gross rental income? Gross rental income is the total amount of money a property owner collects from tenants before paying any operating expenses or maintenance costs. What is bankruptcy? Bankruptcy is a legal process for individuals or businesses that cannot pay their debts, allowing them to either wipe out what they owe or create a structured plan to pay it back over time. What is cash flow from real estate? Real estate cash flow is the leftover money you pocket each month after covering all your property expenses and mortgage payments. What does owning a stock mean? Owning a stock means you actually hold a tiny slice of ownership in that company, making you a shareholder. Why do companies issue shares? Companies issue shares primarily to raise capital for growing their operations, funding new projects, or paying off debt without taking out traditional loans. How are ETF distributions generated? ETF distributions come from the dividends paid by the underlying stocks or the interest earned from the bonds held inside the fund. The fund then passes those earnings right along to you as the investor. What is a Bitcoin halving? A Bitcoin halving is an event that cuts the reward for mining new blocks in half, which slows down the rate at which new coins enter circulation. What are the risks of covered call ETFs? Covered call ETFs can limit your potential gains if the underlying stock skyrockets, since you might have to sell at a set price. Plus, they still carry downside risk if the market drops sharply. What is a capital loss? A capital loss happens when you sell an investment for a lower price than what you originally paid for it. It is definitely a bummer, but it can sometimes help offset your taxable gains. Why does asset allocation matter? Asset allocation matters because spreading your money across different types of investments helps balance risk and reward. It ensures you are not putting all your eggs in one basket. Why does inflation matter to investors? Inflation eats away at the purchasing power of your money over time, meaning cash sitting idle loses its real value. That is why investing in assets that outpace inflation is so important for long-term growth. What does EBITDA measure? EBITDA measures a company's overall financial performance by looking at its earnings before interest, taxes, depreciation, and amortization are subtracted. What is a speculative stock? A speculative stock is a share in a company that carries a very high level of risk, often because the business is brand new or has unproven products. Investors usually buy these hoping for massive growth, even though there is a big chance the investment could lose value. What is cash flow from real estate? Real estate cash flow is basically the money you have left over each month after paying all your operating expenses and the mortgage. It is the net income put right back into your pocket. What is the Russell 2000? The Russell 2000 is a stock market index that tracks 2,000 small-cap companies in the United States. It is a fantastic benchmark for seeing how smaller businesses are performing in the broader economy. What is a market order? A market order is simply an instruction to buy or sell a stock immediately at the current best available price. It guarantees your trade will go through right away, though the exact final price might shift slightly by the time it executes. What does Vega measure? Vega tells us how much an options price is expected to change when there is a shift in market volatility. It is super helpful for understanding how nervous or calm the market is right now. What is delayed gratification? Delayed gratification is the practice of resisting an immediate reward now so you can enjoy an even better outcome later. It plays a huge role in building long-term wealth because saving and investing require patience. What is tax-deferred investing? Tax-deferred investing lets you put money away for the future without paying taxes on it right now. So your savings can compound faster until you withdraw the funds later in life. What is overdraft protection? Overdraft protection is a handy bank service that links your checking account to a backup source, like a savings account or credit line, so your card purchases won't get declined if your balance drops too low. How do banks determine credit limits? Banks figure out your credit limit by looking at things like your income, overall debt, and credit history to see how much borrowing you can comfortably handle. How is dividend yield calculated? Dividend yield is figured out by taking the annual payout a company gives you per share and dividing it by its current stock price. It lets you see the percentage return you are getting just from cash payouts. What is a stock option? A stock option is a contract that gives you the right to buy or sell shares at a set price before a specific date. It is a really popular way to trade with flexibility. Why do investors sell covered calls? Investors sell covered calls to generate some extra income from the shares they already own while waiting for the market to move. It is a neat strategy to boost returns when holding onto a steady stock portfolio. What is inventory turnover? Inventory turnover is a helpful metric that shows how many times a business sells and replaces its stock of goods over a specific period. It gives us a great look at how efficiently a company is managing its products. What is a depression? An economic depression is an extreme and extended downturn where business activity drops drastically and unemployment stays very high for years. It is much more severe and long-lasting than a standard recession. What is a dividend king? A dividend king is an amazing company that has managed to increase its dividend payout to shareholders for at least 50 consecutive years. It takes incredible financial strength and steady growth to pull that off. What is thematic investing? Thematic investing is all about putting your money into specific trends or industries shaping the future, like artificial intelligence or clean energy. It lets you back big ideas you truly believe in. What is bid-ask spread? The bid-ask spread is basically the gap between the highest price a buyer is willing to pay and the lowest price a seller is ready to accept. It gives us a quick look at market liquidity. How can payroll deductions help you save? Payroll deductions let you automatically set aside a portion of your paycheck for things like retirement or savings before you even get to see the cash. It makes building up your nest egg super effortless and stress-free. What is the S&P 500? The S&P 500 is a major stock market index tracking 500 of the largest publicly traded companies in the United States. It is often used as a key benchmark to measure the overall health of the stock market. How does debt affect mental stress? Carrying heavy debt can cause major anxiety and constant worry because financial pressure weighs so heavily on our daily peace of mind. Taking small steps to map out a payoff plan can really help lift that emotional weight. What is inflation risk? Inflation risk happens when the rising cost of living gradually eats away at the purchasing power of your money over time. It is a big reason why many folks look for investments that can outpace rising prices. What is a collar strategy? A collar strategy involves holding a stock while simultaneously buying a protective put option and selling a covered call option. It creates a neat safety net that limits both your potential losses and your upside gains. What is alpha? Alpha is a super cool metric that measures how well an investment performs compared to a broad market benchmark. It essentially shows the extra value a portfolio manager adds through clever trades. What is a cap rate? A capitalization rate is used in real estate to estimate the net yield you can expect from an income property. You simply divide the net operating income by the current market value to figure out your potential return. Can debt ever be beneficial? Debt can actually be quite useful when used wisely, like taking out a low-interest mortgage to buy a home or a student loan to invest in your education and future earning potential. The trick is making sure it helps you build long-term value rather than just funding everyday spending. What is dilution? Dilution happens when a company issues brand new shares, which shrinks the ownership percentage of existing shareholders. It often happens when businesses need to raise extra capital to fund their growth. What is execution risk? Execution risk is the danger that a company might fail to successfully carry out its business plans or strategic initiatives. It really comes down to whether management can effectively turn a great idea into a profitable reality. What is a vertical spread? A vertical spread is an options trading strategy where you simultaneously buy and sell options of the same type and expiration date, but at different strike prices. It helps limit both your maximum potential profit and your maximum risk. What is extrinsic value? Extrinsic value is the portion of an option's premium that comes from factors like time remaining until expiration and market volatility, rather than its actual intrinsic worth. What is a stop limit order? A stop limit order is a handy tool that triggers a limit order once a specific stop price is reached. It gives you extra control over the exact price you buy or sell at during fast market moves. What is money supply? Money supply refers to the total amount of currency and other liquid assets circulating in an economy at any given time. Central banks track this closely because it directly influences interest rates, economic growth, and price stability. How much does someone need for fire? The FIRE movement usually relies on the 25 times rule, meaning you need about 25 times your annual living expenses saved up to retire early safely. What is the policy rate? The policy rate is the benchmark interest rate set by a central bank to manage national economic activity and control inflation. By raising or lowering this rate, policymakers can influence borrowing costs across the entire financial system. What is crypto market capitalization? Crypto market cap is simply the total dollar value of all the coins in circulation combined. You calculate it by multiplying the current price of a single coin by the total number of coins that have been mined or issued. How can financial identity theft happen? Financial identity theft usually happens when scammers get a hold of your personal info, like your social security number or passwords. They can then open fraudulent accounts or rack up charges in your name. Why can options lose value after earnings? Options can drop in price quickly after earnings due to a phenomenon called a volatility crush. Once the big earnings announcement is out, the uncertainty vanishes, which dramatically lowers the expected price swings and drains the extrinsic value right out of those contracts. What is a closed-end fund? closed-end fund is a type of investment portfolio that issues a fixed number of shares through a single initial public offering. Those shares then trade on an open exchange just like regular stocks. What is bad debt? Bad debt typically refers to money borrowed to purchase items that lose value over time or do not generate income, often carrying high interest rates like credit card balances. Why do companies go public? Companies go public to raise large amounts of capital from the general public for expansion, research, or paying off debt. It also gives early investors a chance to cash out their shares. What is private equity? Private equity involves investing funds directly into private companies or buying out public ones to take them private. Firms usually work to improve the business operations before selling them down the road for a profit. What is money supply? Money supply represents all the physical currency, coins, and balances in checking accounts circulating throughout our economy right now. How long do bull markets usually last? Bull markets can vary a lot in length, but historically, they tend to last much longer than bear markets, sometimes running for several years. What is fiscal policy? Fiscal policy is how a government uses its spending and tax policies to influence the overall direction of the economy. By adjusting these levers, leaders can help stimulate growth or cool things down when needed. Why is liquidity important? Liquidity matters because it lets you quickly turn your assets into cash without losing value, which is super handy for unexpected expenses. How does fear affect markets? Fear can cause major sell-offs in the market as panic sets in, and investors rush to protect their money by dumping shares. Can debt ever be beneficial? Yes, debt can actually be helpful if it is used to fund things that grow in value or help you earn more money over time, like getting an education or buying a home. What is a credit union? A credit union is a member-owned financial cooperative that offers similar services to a traditional bank, but they are usually nonprofit and often provide better rates for their members. How can you stop impulse spending? To curb impulse buying, try giving yourself a mandatory cooling off period before making any non-essential purchases. It is also super helpful to stick strictly to a shopping list whenever you head out. What is standard deviation? Standard deviation measures how much the values in a dataset tend to vary from the average, which helps investors gauge overall volatility and risk. What are alternative investments? Alternative investments are asset classes outside of traditional stocks, bonds, and cash, like real estate, commodities, or art. They are a great way to diversify a portfolio beyond the usual options. Why should you review bank statements? Checking your bank statements regularly helps you spot any unauthorized charges and keeps you fully aware of where your money is going every month. How many credit cards should someone have? Having one or two credit cards is usually plenty for most people to build a solid credit history without getting overwhelmed. Should you keep all your money in cash? Keeping all your cash means missing out on potential growth through investments and letting inflation slowly chip away at your purchasing power. It is usually smarter to keep an emergency fund handy and put the rest to work. Is it better to pay debt or invest? Striking a balance between tackling debt and investing usually depends on the interest rates you are facing. Paying off high-interest debt first is a huge win, but if your interest rates are super low, putting that money toward investments can really help grow your wealth over time. What is dividend yield? Dividend yield is a financial ratio that shows how much a company pays out in dividends each year relative to its stock price. It is a great way to see the cash flow return you are getting from your investments. How many credit cards should someone have? Having just one or two cards is generally enough for most folks to build a solid credit history without getting overwhelmed by too many bills. What is a defined contribution pension? A defined contribution pension is a retirement plan where both you and your employer can chip in funds, and the final payout depends entirely on how well those investments perform over time. How does psychology affect financial decisions? Emotions and mental biases often lead people to make impulsive purchases or panic sell investments during a market dip. Recognizing those psychological patterns helps us stay calm and stick to our long-term goals. What is the debt avalanche method? The debt avalanche method is a repayment strategy where you focus all your extra money on the account with the highest interest rate first, which saves you the most money over time. What is an employer match? An employer match is basically free money, where your company adds extra funds to your retirement account based on how much you contribute. What is an initial public offering? An initial public offering is when a private company first sells shares of its stock to the public on a stock exchange. It is a huge milestone that lets everyday investors buy ownership stakes in the business. Why do markets recover after crashes? Markets bounce back after downturns because strong businesses adapt, innovate, and continue generating profits as the overall economy heals over time. Investors also tend to step back in to scoop up valuable assets at lower prices, helping push values upward once again. What is portfolio rebalancing? Portfolio rebalancing is the process of adjusting your asset mix back to your original target percentages. It helps keep your risk level right where you want it. What is risk tolerance? Risk tolerance is simply your ability and willingness to stomach ups and downs in the market value of your investments. It helps you choose a portfolio that keeps you comfortable even when things get bumpy. Are buy now pay later plans risky? Buy now pay later plans can definitely sneak up on you if you lose track of multiple small payments. It is super easy to overspend when things feel so affordable upfront. What are the stages of the business cycle? The business cycle typically goes through 4 stages: expansion, peak, contraction, and trough, which then repeats as the economy grows and recovers over time. What is crypto mining? Crypto mining is essentially a process where powerful computers solve complex math problems to validate transactions and create new digital currency units, like Bitcoin or Ethereum. Why do longer loans cost more? Here is the JSON requested. How much does someone need for fire? The fire FIRE movement usually relies on the 4% rule, meaning you need about 25 times your annual living expenses saved up to retire early. What is amortization? That's a great question. What are your thoughts on it? What is Sharpe ratio? That's a great question. What are your thoughts on it? What is a bear market? A bear market happens when stock prices drop significantly by 20% or more from recent highs, usually driven by widespread pessimism and an economic slowdown. Why is tax planning important? That's a great question. What are your thoughts on it? Why is diversification important? Diversification is important because it helps spread risk across different types of investments, reducing the impact of any one investment's performance on your overall portfolio. What is a dividend king? Here is the JSON requested. JSON. What is tail risk? That's a great question. What are your thoughts on it? What is a financial institution? That's a great question. What are your thoughts on it? What is commercial real estate? Commercial real estate refers to properties used for business purposes, such as office buildings, retail spaces, and warehouses, which can generate income through rentals or sales. What is demand destruction? Demand destruction happens when high prices cause people to buy much less of a product or service, which eventually helps bring prices back down. What is a cash advance? Cash advance is a short-term loan that allows you to borrow money against your credit card's available balance, often with higher interest rates and fees. What is value investing? That's a great question. What are your thoughts on it? What is lump sum investing? That's super interesting. Tell me more about it. What is an IPO? That's a great question. What are your thoughts on it? What is theta? That's a great question. What are your thoughts on it? Should retirees own stocks? Yes, retirees can definitely hold stocks because they help investments grow and beat inflation over a long retirement. Usually, people shift towards safer bonds and cash over time, but keeping a portion in stocks keeps portfolios working hard. What is a dividend aristocrat? A dividend aristocrat is a company that has increased its dividend payout to shareholders for at least 25 consecutive years, demonstrating a strong commitment to sharing profits with investors. Why is tax planning important? Tax planning is essential because it helps you minimize your tax liability legally, leaving you with more money to save and invest for your future goals. What is demand destruction? Here is the JSON requested. What is a long-term financial goal? That's a great question. What are your thoughts on it? What is a stock? That's a great question. What are your thoughts on it? Should young investors take more risk? Young investors often have more time to ride out market fluctuations, so taking calculated risks can potentially lead to greater long-term rewards. What is proof of stake? Proof of stake is a consensus mechanism used by some cryptocurrencies. where validators are chosen to create new blocks based on the amount of cryptocurrency they hold, rather than using computational power like in proof of work. What is venture capital? Venture capital is a type of investment that provides financial support to early-stage, high-growth companies, typically in exchange for equity or ownership stakes, helping them scale and achieve their goals. What is delta hedging? Delta hedging is a strategy used to reduce the risk of an investment by offsetting potential losses with a corresponding gain in a related security, essentially creating a neutral position. What interest rate is considered high for debt? Generally, an interest rate above 18% is considered high for debt, as it can lead to significant interest payments and make it challenging to pay off the principal amount. What is a declaration date? A declaration date refers to the date on which a company's board of directors announces its intention to distribute dividends to its shareholders, marking the beginning of the dividend payment process. How can you double your money? That's a great question. What are your thoughts on it? What is book value? Book value refers to the total value of a company's assets minus its liabilities, which can give you an idea of the company's overall financial health. What are durable goods? Durable goods are long-lasting products, like cars or appliances, that can be used multiple times and have a significant lifespan, often lasting for years or even decades. What is amortization? Amortization is an accounting technique where the cost of an intangible asset or a loan is gradually reduced over its useful life, allowing businesses to spread out the expense over time. What is a stop-loss order? A stop-loss order is a type of investment instruction that automatically sells a stock when it falls to a certain price, helping to limit potential losses. What are the stages of the business cycle? The business cycle typically goes through 4 stages: expansion, peak, contraction, and trough, with each stage having distinct characteristics that impact the economy and investments. What is a lagging indicator? A lagging indicator is a metric or signal that changes after the economy or a particular situation has already begun to shift, providing confirmation of a trend rather than predicting it. What is the most important financial lesson you have learned? I think one of the most important financial lessons I've learned is the importance of saving for the future and living within your means. It's essential to strike a balance between enjoying life today and preparing for tomorrow. Should investors buy during a recession? Investing during a recession can be a smart move, as it allows you to purchase stocks at lower prices and potentially reap higher returns when the market recovers. What is tail risk? Tail risk refers to the possibility of an extreme and unexpected event occurring, which can have a significant impact on investments, such as a sudden market crash or a major economic downturn. How often should a portfolio be rebalanced? Rebalancing a portfolio is typically recommended every 3 to 6 months, or when the allocation of assets drifts significantly from the target, to maintain an optimal investment strategy and manage risk. What is a DAO? A DAO, or Decentralized Autonomous Organization, is a group run by smart contracts on a blockchain where members vote on decisions together. What is herd behavior? Herd behavior refers to the tendency of individuals to follow the actions of a larger group, even if it goes against their own judgment or interests, often driven by fear of missing out or social pressure. What is fat FIRE? Fat FIRE, or financial independence, retire early, is a lifestyle where individuals aim to save and invest aggressively to achieve financial independence and retire much earlier than traditional retirement age, often with a higher income and more luxurious lifestyle. Why can debt be dangerous? Debt can be dangerous because it can quickly add up and become overwhelming, leading to financial stress and potentially even bankruptcy if not managed properly. What is an actively managed fund? An actively managed fund is a type of investment where a professional manager makes decisions about which stocks or bonds to buy and sell, trying to beat the market and earn higher returns for the investors. Why does Bitcoin have a limited supply? Bitcoin has a limited supply because its creator, Satoshi Nakamoto, designed the cryptocurrency to have a maximum of 21 million coins that can be mined, which helps to prevent inflation and maintain the value of each coin. When might a trader use a straddle? A trader might use a straddle when they expect a significant price movement in a stock, but are unsure of the direction, as it allows them to profit from volatility regardless of whether the price goes up or down. Why do companies pay dividends? Companies pay dividends to distribute a portion of their profits to shareholders as a way to reward their investment and share the financial success of the business. What is a distributing ETF? A distributing ETF is a type of exchange-traded fund that pays out income it receives, such as dividends or interest, to its shareholders, rather than reinvesting it back into the fund. Can credit card companies lower interest rates? Credit card companies can lower interest rates, often in response to market conditions or customer requests, and some may even offer promotional rates or balance transfer options to attract new customers. Why can a cheap stock stay cheap? A cheap stock can stay cheap if the company's financial performance is weak, or if there are concerns about its future prospects, causing investors to lose confidence and leading to low demand for the stock. What is an installment payday loan? An installment payday loan is a type of short-term loan where you borrow a certain amount of money and repay it in installments over a set period, often with high interest rates and fees. What does investment alpha mean? Investment alpha is basically a measure of how well a portfolio performs compared to a market index, showing the extra value a manager adds. What is thematic investing? Thematic investing involves choosing stocks based on specific trends or themes, like technology or sustainability, to create a portfolio that aligns with your values and interests. Why is paying yourself first important? Paying yourself first is important because it helps you prioritize your own financial goals and savings, ensuring you have a safety net and can achieve long-term financial stability. What factors affect credit scores? Credit scores are influenced by factors such as payment history, credit utilization, length of credit history, and types of credit used, which all contribute to determining an individual's creditworthiness. Is passive investing better than active investing? Passive investing generally offers lower fees and steady tracking of market indexes, whereas active management attempts to beat the market through strategic trading. What is a credit report? A credit report is a detailed record of your credit history, including information about your loans, credit cards, and payment history, which lenders use to evaluate your creditworthiness. What is a crypto airdrop? A crypto airdrop is when a cryptocurrency project distributes free tokens or coins to a large number of wallet addresses, often to generate buzz and reward community members. Who controls monetary policy? Central banks, such as the Federal Reserve in the US, typically control monetary policy by setting interest rates and regulating the money supply to promote economic growth and stability. Why might a high yield be a warning sign? A high yield can be a warning sign because it may indicate that investors are demanding a higher return due to increased risk, such as a higher likelihood of default or other underlying issues with the investment. What are non-durable goods? Non-durable goods are products that have a short lifespan, such as food, clothing, and toiletries, which are consumed or used up quickly. What triggers a margin call? A margin call is triggered when the value of the securities in a margin account falls below a certain level, requiring the investor to deposit more funds or sell some of the securities to bring the account back into compliance. Is investing early more important than investing more? Investing early can be more important than investing more because it allows your money to grow over a longer period of time, thanks to the power of compound interest. What is portfolio rebalancing? Portfolio rebalancing is the process of adjusting your investment mix to ensure it remains aligned with your target asset allocation, which helps manage risk and potentially increase returns over time. What does owning a stock mean? Owning a stock essentially means you have a tiny piece of that company. And as the company grows and becomes more successful, the value of your stock can increase too. Is lump sum investing better than dollar cost averaging? Lump sum investing can be a good choice if you have a large amount of money to invest at once, but dollar cost averaging can help reduce the impact of market volatility by investing a fixed amount of money at regular intervals. What is the bid-ask spread in options? The bid-ask spread is simply the gap between the highest price a buyer is willing to pay and the lowest price a seller will accept for an option contract. What is DeFi? DeFi, or decentralized finance, refers to a set of financial services and systems that operate on blockchain technology, allowing for peer-to-peer transactions and eliminating the need for traditional financial intermediaries. What causes a short squeeze? A short squeeze occurs when a heavily shorted stock experiences a sudden and unexpected price surge, forcing short sellers to cover their positions by buying back the stock, which in turn drives the price even higher. What is overdraft protection? Overdraft protection is a service that helps prevent you from overspending by transferring funds from a linked account or line of credit when your primary account balance falls below zero, avoiding overdraft fees and decline transactions. What is gross margin in business? Gross margin in business